Let's get started. MPW is popping off, which is interesting. This is like a real deal kind of wedge too. It's very good. Very, very good. Let's see here. Honestly, this looks pretty nice. Looks pretty good. Breakout right there at 392. Yeah, it should be heading back up towards 570s pretty easily. Hello, Happy New Year. Welcome, welcome. No, don't expect anything too crazy today. Just gonna kind of do my recap and we'll see what happens. Not really much to talk about. Yeah, we had a weird holiday break, right? So we had a bit of nothing on AMC, quite a bit of movement on GME, and all my charts are reloading, so I haven't touched them. This is an interesting one right here. Gonna have to take a look at GME for a bit. It's really bizarre how like it was insanely accurate. I mean, I can't go back in time and like show you, but this was on the Thursday before we left. I think we had Thursday and then I left on Friday, and I mean, it looks exactly like what I expected to have happen, even almost timing wise. What's interesting about this one is this was based on that rotation. So like when we had left it on GME, that rotation, it had broken out. I don't know how to describe this except that it's like you could maybe call it like an A, B, C correction, or like a 1, 2, 3, 4, 5. But I think on the whole, I would just look at it and say it came back to the center of the wave, bounced off, and the RSI had broken out early, if I recall. So that was fun. Anyways, I thought it was going to kind of come up here, bounce 29, 23, bounce at 29, and head up towards 35s. And it did. Got pretty close. Didn't quite get to 35. But part of this was also like initially a little off, because we talked about how the like back here, it really wasn't, it was rotating, it was doing a rotational symmetry, which is good. It's easy enough to follow, but it wasn't following the blue line, it was following the orange line. So it was kind of following a lower path, a lower trajectory path. But honestly, like, I mean, to me, GME looks like it's exactly what I would want. Like, it's really, really nice here. Even came back down and retested this creek twice. I mean, it's really strong. If I had one complaint, it might be that it came back below like 32 again. But it's just a small thing. So, I mean, it is good looking. It looks good. Yeah, I don't know. It's not impossible. You know, we talked about a lot of these setups being maybe a pop into January and then coming back down. Certainly not impossible that it's over. I mean, I hope it's not, but rotation-wise, we had measured it out from, I want to say from back here. We might need to just redo it because it's been a minute. It's been a minute. I was on a longer trip during the holidays, so I haven't really touched it. I mean, I looked at the stock market like 2 times. It looks like that's it right there. That's that rotation right here. So, yep. And this is backing up against that line. Like this was backing up this way. So I may get one more big push and then we'll see. That's just a rotational like S curve. It's basically like up, sideways, up. And you would see that partially as sort of a rotating movement. So if you look at the orange hit here, you can see like once it hit going in reverse, this is where it's established resistance. This is where it would hopefully establish support. Maybe push up again. It doesn't look overtly positive if you're just following the S-curve. It doesn't look like it would go way beyond maybe up to like 38, but that's not too far off from some of the original expectations that I had, which was pretty low. It's definitely not impossible it goes up farther, but you can see like a lot of the earlier triangulations in this case, they just didn't work. So, I don't know. 13F2 SEC. I mean, what's a 13F filing? What's it about? You want to tell me in short, or do I have to go read it for myself? Be lazy. Like I said, I haven't touched the stock market in like almost 2 weeks, so I really haven't. I didn't trade it, barely looked at it. I was traveling, and we traveled like a total of like 2,000 miles or something, visiting family and stuff, so did not have a lot of time for trading, and frankly, there were a lot more important things to worry about for me on the holiday, so I just didn't look at it. So I'm like really behind on everything, I suppose. So, like, I knew there was that one guy kept coming on here saying there was some kind of new stock exchange 24-hour thing. We talked about that a good bit. Let's start cleaning this up a bit, shall we? So anyways, this is a decent enough possibility that we could get maybe this pocket. We never hit that outer mark, so that would make sense. It's right here on January 7th and 8th. I want to say that's about the same time in 2021 that we really hit bottom and then started taking off. It was not right away. Let's go back and look. I'm talking about way back. Nothing has to be one-to-one in the market, but sometimes seasonal things like that do occur, so it's good to kind of pay attention. Oh, we went way back to 2012. Oops. Possible dates, you know. Yeah, this didn't take off till, yeah, about the 8th. That was right. So it was a similar kind of walkout. I mean, there's a lot of similarities here in this build out. It is a reversal. I mean, it's doing a very similar pattern. It's not the exact same, but if you were somebody that wanted to follow that, you could probably follow it and say that it's doing something pretty similar. We might want to examine that some right now. So he says it's a new rule that the Trump admin and Doge with Elon, I believe, enacted with new SEC chair that states, as of January 2nd, 2025, anyone institutional shorting over 2.5% of the float must show their short positions to be transparent. So from today until February 2nd, so 1 month, they all have to eventually show. Oh, okay. Well, that'll be interesting. That's real deal kind of thing. I mean, I don't doubt you. I don't know. So if that's a real thing, then yeah, that'd be really cool. See that go through. February 14th. Okay. Showing us some love on Valentine's Day, I guess. It's good. Yeah, I'm not a huge proponent of like the one-to-one fractal stuff with 2021. You know, I've used it a little bit on AMC lately just to talk about possibility, because we saw a pretty strong triangulation going into January that made us think that that could be possible. Has it followed through? Well, no, but if you were to use the 2000, meaning like it didn't follow through within its own, I don't think, within its own, and we'll have to get to AMC in a minute because it's another whole nother beast. GME is really different from AMC right now. Yeah, it's a whole nother beast, and AMC didn't really follow through on its setup for triangulation going into the 30th, which bothered me a lot. About the only time I looked at it, I did talk to the Discord group, I think for like a minute, and I said, hey, I'm going to just post real quick and say this and this doesn't happen. It's not looking too good. And it didn't happen. It just kind of went flat. And to be honest, it just kind of looks like they let it go. Meaning like they're just kind of letting the trading happening. They're not really interfering or pushing it or anything. They're just kind of like letting it be. And it's trading decently high volume, which says something. And again, we'll get to AMC, but one of the things that was interesting is if there were going to be a January setup, we had looked at the similarities, and they're quite pronounced. There's really strong similarities on RSI and OBV to 2021 setup, even in the midst of dilution, which did occur in 2020, late 2020, going into 2021. That setup has some really striking similarities to what we're seeing now, albeit it is a bit different. It's not perfectly one-to-one. There's some parts of that setup that are kind of missing. And then there's other things that are just different. Like proportionally, it's much flatter right now. We did not have a deep dive. We didn't fill our gap. There's a lot of big question marks, that make you think it's probably not, like it wouldn't be worth betting your house on, right? I mean, maybe it happens and you'll probably know because there'll be a certain breakout. And then other times it's kind of like, you may not want to put the cart before the horse, right? You just kind of want to wait it out because there's enough differences that it doesn't quite feel like it's a sure bet. At least to me, I'm like mostly there. Like I still think there's a strong possibility that we're going to squeeze going into the new year here. Like I really do. But I don't think that it has to be one-to-one by any means. So I know it's weird, and I've been talking about this for a while, and it doesn't look great on AMC right this second, but the similarities were there. So we're going to have to kind of recap and see what happened. Anywho, I don't want to ramble about that anymore, but point being is that like if we were to look at GME the same way, we probably would find that there's some similarities. I haven't checked, so I'm going to just be straightforward with you. Like we didn't really ever look at GME's comparison. I don't think I ever did that. We looked at where it was proportionally and what was being set up currently, and it did seem like a possibility that there could be a kind of a rally type move going into early January here. Like we had a lot of high targets. Frankly, some of those I think have been missed. The first couple push-ups, this one and this one, the first two were right on the money, but this third one didn't happen. And again, I think part of it was just because it didn't actually reach, like it's not going for this blue line, it's going for this orange line. What I mentioned a little earlier in the stream was that I had originally thought it might be a lot steeper. And I think I changed my mind before I left. So I know that if you've been following for a while, you probably are like, well, that's nothing new. No, it's not. I'm just repeating it because it's been a while. It's been like 15 days or something, right? Half a month. I don't know. Last time I did a stream was a while back. So anywho, I'm not really expecting it to hit this blue mark going up. Not necessarily. Instead, I'm thinking the rotation's happening low. And it is hitting. It was, like I said, it's very, 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 very tight. It looks very similar to what I was expecting. There are some problems, like right now I'm on the 4-hour. You can see there's a pretty massive divergence right here. If this ends up topping or dropping through here, especially if we start losing creeks, it's going to be ugly. RSI is definitely pitched down on the 4-hour, probably on the daily as well from these two peaks. It is going up with some heavy volume, but by comparison to what we have been experiencing down low, but that could be a distributive effort. So it's a very, so-so kind of setup. Now, did something similar happen? That's kind of what we're trying to get at. Yeah, we had a similar RSI divergence right here going from September 2020 through October 2020. pretty similar to this little November, December top where you have high volume input all of a sudden. Like you see right after this earnings, the volume kind of hikes. You have a divergence on the 4-hour back in 2020. And when the divergence corrects, it kind of just builds out again. And this is where I would say this is like an S curve. Could I identify a rotation is a good question. Is there a similar rotation like there was here? And I think the answer is yeah. What I'm going to do is I'm going to try my best. I don't know, these charts are messy, but I'm going to try my best to kind of see if I can pinpoint it. I think it's like right here. There's two marks right around this earnings. This was in August of 2020. There's two marks, and yeah, you can see that this is a clear S-curve rotation. It's a bit odd because it looks like after the big squeeze happened, it actually came back and checked that trend. Now, I would be careful in saying like a trajectory is a trend. A trajectory is kind of malleable. It's just the idea of like direction. It doesn't necessarily have to be a trend. Is there a trend here? Maybe. I'm not trying to find it. I'm just pointing out like this is the only trend I can see early on. It's the first build out. It does create an S-curve. So what I would do is I would suggest to you that this motion here is a complete, I'll call it a 50-50 because it probably is, but it's a complete S-curve motion that's designed to get you, in some ways, a breakout. There's a key level. I've already got an arrow at it. This is, right now it looks like it's at 493. In reality, going backwards and looking at that 2020 area, whoopsie, that's not what I wanted to do, wrong one. Looking at that 2020 area, this was where it broke down going into like March 2019, and then you can see it was already really low when COVID stuff happened. So it's a bit different than AMC. But this is where I would consider the drop to be. So I had already marked this off previously. So this whole motion is kind of getting you back above this support here, which is where the last big LSPY was. It was a long-term distribution that lasted for a long time. March 2018 till basically a year, March 2019. I mean, it was a year-long sideways, and then it broke down. And then this is all like a bottoming action with a spring and then a retest. And then this is an SOS that leaves that area in the same pocket. So when I look at it, that's exactly what I'm thinking. Like in my head, I'm not thinking more complicated than that. It's pretty simple. Like, yes, there is all kinds of stuff going on with Roaring Kitty and the stream community. And I remember there's a lot with like Elon Musk, you know, buying in or whatever. There's all kinds of like different milestones here. But from a technical standpoint, it's pretty straightforward. Like this is a spring action. It comes up high. It pushes the creek. You can see the yellow mark right here is pushed. Can you spray if he starts going like crazy? You see it's pushed. And then this is what's called a retest. So it comes back down to test the floor. And it basically makes like an LPS, last point of support off of that, finally off of that major creek cross, and then it jumps the creek that's currently being developed, and then you can see that's where the S-curve actually starts. That's why I started the pitch right there. And then this is just direction. We're starting with like 2 marks, right, to determine which way we're going to go. And then this is an S-curve, and it's pretty straightforward. I mean, you can see that by the time it comes back here, that's the pivot. It is right on the money, right there. That's where it kind of makes the middle. And then when it comes back up, it's breaking back above that mark. So I would consider this a rotational symmetry without even going much further. I would say that this could be the same. The question is then, what are we breaking down from? I know that this is visually more like, really frankly, it's more like the top back here. We talked about the iterations from the top after the big squeeze in 2021. This looks a lot more like an iteration of that. So as opposed to like the bottom before the squeeze. But you would have a similar question, like, is it making an S-curve that's building a support that was previously a resistance? The answer is yeah. I mean, right where that middle would be right around maybe 27, 28. It makes sense. You know, the way we have it built right now, I have it a little bit willy-nilly kind of to the side. I'm not really 100% positive because, again, it didn't follow the blue, which actually would have been probably more comparable to this left side example, but it's following like a lower pitch here. Nevertheless, it did jump a creek. It did start a big move that looks like an S-curve, so on and so forth, right? Like, we could keep going with this comparison as long as we want to. I'm seeing a similarity here, which is a good thing because this looks kind of bearish to me presently. I just told you why. It's a divergence. Divergence is not always bad. It just typically denotes that there's a bit of a weakness of some kind. It could be an intentional weakness that's made to look like, oh, it's bad and therefore it's a trap, right? If it's intentional and it's really like a trick. But if it follows through with that weakness, then usually it means there's a massive directional change. So if, for example, you're on a top and you get divergence opposite on RSI, that's called bearish divergence. Strong bearish divergence if it's like really, really steep, in which case this is, and then this is. But this similar thing happened in 2021. There were continual push-ups, and I'm looking specifically at this first one right here in 2021. This is coming right off the base of the S-curve. So it had already been divergent, just like we were presently. So we got this early divergence on the first push, and that went, again, from November through December. So there's a similar divergence here on the first push back in 2020 going into the end of the year. That's pretty obvious, right? I hope you guys see that. I don't think anyone doesn't see that, hopefully. And then there's like another one. So you're kind of getting like a 1, 2. But the second one it's different because it's pushing higher after making the rebound. So you, instead of having like, if I were to describe this in terms of like an M cross, what I would be talking about is like the first shape is already done. This is like the creek cross, and then this is like the second shape build out. And that's the way I would describe the waveform. So it's a little different because of where it's happening. So it's like a larger structure in my opinion. That's just the way I would interpret it. Like, this is the first wave, back, second wave, as opposed to like all being part of the first, which is both of these early ones are. There is a divergence here that's bearish, apparently, back in the day. So it would have been dangerous. Like, you would have looked at it and been like, I don't know, man, it could turn down, right? And what mattered the most was that it did not break down here. It didn't break to new lows. So when we look at this presently, it certainly looks much more volatile in some ways. We've got a lot steeper moves. We've already talked about this being like perhaps like the middle of a larger wave. We talked about that probably back in December 2024. We're new year now. And I think this is your middle wave. So it looks fairly similar. You know, there's a lot of similarities. The push-up is a bit weaker here. You can see this really pushed and became, I'm on 4 hour. It's the same time frame. This pushed and got really overbought back in November 2020. Ultimately, it doesn't take off. It takes a long time. So what happens is that this goes up into November 2020, bleeds down into December. You get a late rally near Christmas time of 2020, and then kind of flattens out. We would call this I mean, if I had to say what it was from a Wyckoff standpoint, I would say it's an SOS of an SOS. Like, it's a sign of strength here. It's building off the top of the range before it takes off. But ultimately, like, looking back, you can see why that mattered, because like where that pinpoints is right on top of the breakdown zone, excuse me, where the supply had frankly built a pretty big wall years before. So basic stuff, right? Yeah. Well, everything that you see on my chart right now is kind of stuff I've already had on the chart. So a lot of this stuff might be a little bit noisy. And I think that's fair. You know, I haven't really, like I said, I haven't really touched these in a while, so if I needed to clean it up, I could probably do it pretty quick. The important thing, at least on GME, in my opinion, is I got it right in terms of where it went, and that matters. For being, 15 days or whatever in advance, trying to mark it off, it's nice to see it went the same direction that I thought it was going to go, which is always a positive. But when we look back on it and we're doing something like a comparison, you want to make sure that it makes sense as a comparison. So I got to make sure that this actually works. Otherwise, it's pointless, right? There's no point in doing it. Yeah, I would say that that's probably accurate because you see this back here? This is the double top. It's right off of 2982. I see 2 marks there, maybe like 2991, whatever it is. I see 2 marks there. These would be like your cat ears. There's a distributive action that happened back all the way up to 3350. I want to say that was the Roaring Kitty thing, but there was a lot going on at that time. There's a lot of little dates. Actually, I think it was earlier. It was on the 7th. Anyways, this is ultimately like where it was pinned. And I think it's important to note, like the rest of this is there. It is supply zones, but I would argue pretty firmly that that actually looks better as a ceiling, because notice that when it dropped in May of last year, it dropped off that 30-35 here. That was where the big gap was. And then really this whole structure is just kind of building out to like pin you back beneath that level here. So we might consider it a little bit wider. I could maybe take it down to like 29.30 or something, but there's a couple wicks here as well. Anyways, point being, that would be the level that you would need to get over in order to advance. So it makes sense to me that this is where it's setting up, that you have like a push, an advancement, and then a cross here, and now it's kind of coming back down and retesting that level. It's doing exactly what it needs to do if it's going to advance. So simple enough, I guess. If this holds and builds out, you might see it another pop here. Now, the rest of it, meaning it holds like right above, we'll just say 29.90. I think if we can hold 29.90, we'll be in pretty good shape. I do think it could go a little bit lower, but I don't want to, I don't know, man. I don't really want to like get too nitty gritty with it just yet. I just got back, so let's just say 29.90 right now, this little pocket. And much like what we experienced back here, you can see that orange line. That's not really the same line, so don't misunderstand. But it is in some ways the same, because you guys are like, what? Is it not? Well, remember, like when this broke down, there's a hook that happens. This just happens to be on like a massive parallel, right? But this is, again, like this was a support and then it turned into a resistance. When bulls take it back, and they do, it happens right here. It intersects at the same time that this drop happened. While I wouldn't say it's like one-to-one, there's a very strong similarity with what we see here when we look at this and we look back at what happened roughly in June, July, and that's where that support was, right? And we can see the direction of that is pointing towards where we are now. So again, triangulation matters. It's not always perfect, because sometimes I'm not perfect. Like I may pick the wrong line or something like that. It could be a little bit more, it could be technically like this, like less steep. I kind of made it steep here. I think you can make an argument that it's like here instead, since that's like the middle. Anyways, so you can see why I think that would be really similar. That triangulation matters, and I don't think it's happenstance. I think that it's important to note those things. So yeah, like where we are now, does that look really similar with regards to like this setup? Sure. Guys, I mean, I know I make things kind of complex sometimes. I do. but it's also really straightforward at the same time. Like if you can get over that supply hump and hold, and you jumping that what I call like a hook line, hook, line, and sinker. No, it's where the hook is developing like a last point of resistance, essentially, last point of support and resistance back here. That generally is correct in terms of the wave, because that's where the wave is broken down, it's resisting. If you can get back above that, you're in good shape. So if it triangulates really, really well, and it makes sense of like an SOS level, and it makes sense of RSI and all that other jazz, then there's a decent probability there. And I'm thinking that that's the case. I'm thinking there's a pretty strong probability here. So that looks really, really good. It's right where it needs to be. So what does that mean, Booksy? It's going to take off and go to the moon? Well, look, I will say this, that the nature of the moonshot kind of squeeze momentum stuff, I think it's all relative. So I think just like anything else in the market, you just kind of have to take a look at where it is and like what's going on. Proportionally, is this the same as this? No, it's not. This is a multi-year setup. This is not. You do not have as much of a cause built, and you've already made a big move. So like that's important to know. There's already a big move here. Yeah, there's a retest on a massive creek, which is important. We missed some of them. We've talked about that. But just in terms of like, what am I comparing here on the screen that you guys are we're looking at it right now, it's not the same. Like proportionally, it's different. In the grand scheme of things, I would not stop there. I would probably go further and suggest that we have to continue to look back to the big picture. But for now, I would say that it's not quite the same. There's similarities, there's differences. One thing I would note is like when this took off, where did it go? And we already know the answer to that. It went to all-time highs. But remember, this has a big cat ear before it drops low, and then it recovers. So again, you're looking at this proportionally. Where's the cat ear locally? Well, it's right here, right? There's a big upthrust that goes up to like 80 something in after hours, but in regular trading hours, it stopped at 65. And then you got a breakdown, and you've got essentially two ears. One stops at 47. The next, which is really like the top of the cat ears, where we broke down here and held beneath at 29. It's where we're trying to jump right now. So in a way, like, is there similarity? Yes. Is there also differences? Yeah, there's some pretty key differences. So I would look at ultimately like where did this go, and it ultimately does like a 50-50 roughly. Kind of a jump over the major creek here. There's a rapid fire jump here. You can go back and double check me on that. I don't know if it's exactly 50-50, but it's pretty close on the big picture. So after it made a move, it continues up. So one thing would be like, oh, okay, where's the creek at locally, like the little one, where we are now? Could we estimate roughly like a 50% jump over that? And then also, what else happens is it goes up and hits that greater waveform. So just like this little guy, we're expecting it to come back here. And we triangulated that pretty early on, by the way. You guys know that when we were back in October or whatever, we triangulated it would come up to here, and it did. It's been very, very friendly with us. It just has. It's been really nice. Very straightforward on GME. Not so much on AMC, but on GME it's been really straightforward. And it's been pretty much on point every time. So yeah, so the rest of this, maybe you would look at this as a series of ramps. Like this had a parallel structure that goes up. I don't really see the same thing there, but we did talk about some of these red lines of maybe these are going to be intersected much like this was. Things like that would matter. If we were just looking at parallels, we might suggest that doesn't go that high. Maybe it only comes up to the parallel structure, which isn't very far, and this is more or less where I was at. It would be like here or here, one of the two. And that's kind of where I was before. Like I had thought it may pop to like 40, 41 and then just kind of stop. And I still think that's a very strong possibility. for those that are looking for something like massive, sure, there's always a chance that it's going to go up and meet somewhere between 51 and 80, which is really high. And we talked about that as an alternative. I don't think that's changed. I think that's still a possibility. It doesn't seem unreasonable to me. You know, creek-wise, we don't really have a 50-50 creek like we did here. It's very steep, points down. It's just the setup, just different. So if I were to think of this as like a distributive action or just an action that's just trying to get you over the peak, I do think this higher hit at 80 going into January is very possible. But it'd be like next week. That's where we triangulated it. That's pretty crazy. But sure, I mean, it's possible. You could say it's not, but you know, once GME finds its footing, it's prone to just take off and go to the target they want to get to. So it's definitely got the volatility there to make it happen. So I mean, anybody who had called that out back here, and I had called out a move to 80s, I didn't think it was going to go there in like 2 days, but that was because of the giant triangle. The triangle had a breakout target of like 85. And never hits that in regular trading hours, but it did in extended hours get pretty close. I would never have thought it would get there like in 2 days. Never, but it did. So you never know. You know, it does sound crazy. You know, we give people a hard time in our community about big call outs that don't make sense or whatever. But if this does hold above 30 here, I do think it's very likely it could make a breach pretty easily of $10 to 40. Beyond that, I think we're talking about something else. You know, we're really talking about some massive pushes to maybe 50, and that's where you get into real like squeeze talk, like where people are like, well, I don't know about that, but then you know, it had to be some kind of short squeeze. I don't know. I guess I'm not gonna sit here and pretend like I know everything. I don't. The ideas behind it though make sense to me. If it holds the $40 level, I genuinely think it's kind of like on tens. You kind of move up right up to the 50s. There's a marker there. So that's that. Now, some people are going to look at this and suggest that, well, it's going to just keep going to all-time highs, so on and so forth. I made some cases for that in the past. I'm not going to make that case right now. I think that what we're experiencing, I still think that what we're experiencing to some degree is an iterative motion. Meaning, like, if you look at the big push-up in 2020, you can see that push-up followed by a secondary push-up to jump the creek. I think we're doing the same thing right now. We had, like, a massive push. We're backing up. We're doing a secondary push-up that's jumping the creek. But just like we experienced here on this big move, we might get one like that. But then the question is, does it come back down to jump the creek, or to come back down to test the creek? This one went really far back, you know, to go back and try to retest. And then there's question marks there, because then you're like, well, are we really forming like a gigantic cat ear, kind of 1-2 motion? And that's neither here nor there yet. It will matter in a couple weeks if we do get a pop, but maybe not today. So looking at AMC, I have mixed feelings about it. I've already kind of talked to some degree on the Discord group. Not a lot, but I just said a couple things. So like number one, when it kind of piddled out around the 20th, it generated what looked like to me a cat ear, and I didn't comment on it because I wasn't here. I was traveling, so it's like you don't really need to worry about it, and I'm not worried about it too much. I kind of wanted to see if it would come down and hold, because this by itself doesn't mean it's going to break super low. I wanted to see if it was going to come down and hold here a higher low. When it doesn't do that, then you're kind of holding your breath, waiting for two things. One is, does it hook, right? You can see we're testing a hook right now. So that's one. And then the second thing, of course, if you're considering a hook, is you're considering whether it went low. So there's kind of two elements there. And this is very normal for us. Like a distribution that looks like this is pretty classic for AMC. It's really classic for the whole market. But it's very clear here, like that's a cat ear pattern, and then this is a wave down. So now you're waiting to see if this jumps a creek. And I didn't chart this, had no desire to chart over the holiday. But if I were charting it, I would have taken this and driven it. It's kind of interesting too, seeing it at 387. I wonder why I had 387 marked. I don't know. I probably was thinking it would come back, perhaps if it came back down, it might come back to this red mark around 387. I'm not really sure why I marked off 387 earlier. Who knows? Maybe I said I thought it would come back down, but I don't remember that. Anyways, point being, this is where you're looking at just kind of a classic, did we jump the creek kind of motion? Yeah, we jumped the resistance, but we're dealing with a pretty evident hook line, right? And it's not really any different than any other time we've made these motions. You drop through, if you can't recover and you can't jump back above, you're not going anywhere. The waveform is a very simple way of looking at the market. And anytime you have that motion between the cross, if it does not hold, right, then the next step is always going to be to come back, always. And it's super easy to pinpoint it if you're paying attention. Always going to be to come back. So if this doesn't hold, it's going to be to come back down and test this guy, right? It's going to push low, like it's going to try to push lower. That's the wave down. Unfortunately, this can, I mean, I hate to say it, but you know, from a bearish perspective, if you were not at all bullish, and I am a bit, but I would say if you were really bearish about this, I would make the argument as a bear that this could be the middle of a giant S-curve. Much like we're talking about on GME in reverse, I would do the same thing going forward, but down instead of to the upside going down. So I would talk about rotation, right? So if I'm a bear, I would be looking at this saying, I think this is forming a downward rotation. What we're really doing is generating like a wider creek that we're going to use maybe towards the downside. So I would be arguing about that. And I would be suggesting that we're going to see a capitulation. Why are you talking about downside, Booksy, if you're not bearish? Same old Booksy. Different year. But yeah, that's what I'd be looking at. Because ultimately, like, if this doesn't break out, you're not going to see, I mean, this is still kind of within this larger channel here. If this doesn't break out, you're not going to see it like advance here. So this pocket at 415 is super important. I think I mentioned that on the group chat. I think I said like it needed to come back over 415. It's pretty straightforward. That's the key level. We've talked about that a bit because of the weird after hours motions, but I think that's really your key level here. So you can see why this is problematic, right? If it cannot advance right here at 415, there's really no need to ship it, you know? Like, oh, it's gone, it's going, or whatever. So for me, I'm like looking at this like, meh, right now. I kind of think we're right there. Next week could be huge. Next week could be a massive letdown for AMC. It just depends. And if it's huge, it's going to make people feel like, you know, whiplash. They're not going to know what happened. But I think that is fairly straightforward, right? When I looked at 2020, there were a lot of similarities between what happened in December going down into June 6th. And I think that June 6th was the day that it actually hit bottom. But in order for us to confirm in the same way, we would have to come back above. Frankly, I guess at some point we'd have to make a higher high above 438. So you'd have some kind of like pop here and then make a backup and then you'd probably run. It'd have to look like that. So it would be like a little micro SOS followed by a backup to the creek and the retest on 415, and then it should just take off. Much like in 2020. That's what it would have to look like. So if you're looking for that January squeeze motion, it's got to look like that, in my opinion. It just does. Like, there's no way around this. It has to kind of jump here. This has to be just like the spring that failed to go lower. Like, it's an attempt to push the stock down, but it's not going to go down and get the gap or whatever. And if it doesn't, then there's really no reason to think too hard about it. I think it's fairly straightforward again. I think this would be thought of as like a midpoint. Probably it rejects at like round 415, and then you'd have like an S curve to the downside going down to, it's hard to see it, you know, obviously, like, you're kind of looking at this like, well, it seems like really far, right? Yeah, but it would be like a massive slide down to the threes. This is more or less what I think most people are expecting anyways, to be fair. Like, we're talking about possibly bigger run up, but in reality, that's totally reasonable. Like, for someone to think that it could drop right here because it's already broken down. I mean, someone could look at that and just say, well, I think it's just going to hit 415 and reject, head down to the threes and fill the gap. Sure. Like, totally reasonable. Makes sense to me. I don't see that as controversial at all. Like, totally get it. You know, and it is right where it needs to be to do that. When we looked at RSI and all that jazz before the break, like, I had made some pretty serious comparisons and said that I thought that there were some very, very strong possibilities here, but certain things needed to happen. So, like, one was divergence here and breaking above this guy. This is still divergent, which is really good. So, again, I want to kind of back it up a minute because I know some people are like, well, if it's super reasonable and it seems really straightforward and it's downside as possible, then AMC always chooses down. That's not true. It is often the case, but it doesn't always happen that way. Okay, I'm going to back it up a little bit because I think that the RSI does give us a slightly different story, and it doesn't look completely off still. It looks quite nice. So this is a lower low here on the 27th, but the RSI is divergent. Decently high volume in this bottom. I mean, that's a lot of volume for, it's not usually in the middle of a cat ear. It's like the volume drops off a cliff in the center here. I'm not really seeing that. It's staying elevated throughout. And if you look at these other bottoms, we've had a lot of buy-ups off of 415. But like previously when we came down low to 415 way back in October, that volume looks pretty weak compared to where we are now. So that's good. That's a good thing. I think that higher volume is good in this case. You have a divergence on RSI. It is tempting to break about this, I would call it a local creek here, without going, again, too crazy with detail. You can see that there's been a resistance. This clearly is trying to push and advance. You see how it comes back up to the top here. RSI is at 43 points. Very similar to where it was when it first pushed up. So I think it's trying. You can see it's attempting to try to get above. And then that reflects on a greater push on this cross, which is the major ear that we talked about. So if it's going to go, it has to hold. And I already had that little doodle over here, but that was way back on the 20th of December or something. So that's not irrelevant. It's still relevant. It's just it didn't do that. It didn't hold there. Instead, it just kind of slid down, like, again, like as if they let it go and just let people do whatever they want to do. People buy and sell without really forcing it to go anywhere. Kind of eased it down. And now it's got to make that support. So it's kind of like GME. We were talking about it needs to kind of break above. Well, it needs to hold the support, I should say, right around 29.9. AMC really needs to kind of push a little more. I think it needs to get above 415, but it needs to hold the support right here and sort of prove that. I'd be happy with that if it did it. Yeah, 4 hour on MACD is curled up. Honestly, this looks really solid divergence-wise. Again, it is divergent. Like, MACD divergence is a real thing. This is pushing up. It's already crossed over, like the blue crossed over the orange. That's typically pretty bullish. It even like hit here right on that bottom and held. You can see there's a spike here. In the green, you've got some good possible upward mobility. It's got to follow through. It's always the case. It's got to follow through. You don't want to like a fake out, but it looks pretty healthy, you know. So you've got two, and this is still a macro divergence as well. I forgot about that. Going from October 10th down to where we are now. It's not a macro divergence on the MACD though. MACD did make a lower low, but it is localized from December to now, and both of those are divergent. So pretty strong. I think that looks good. That RSI looks really good. MACD's like okay. Like it looks like a localized divergence, not a macro divergence, but still good. So that's positive. So yeah, I mean, again, you can make a bearish case for this really easily, but I think that a lot of these indicators are looking like they're sort of subverting the expectations that it would be bearish. They're not doing what I believe a bearish, what a bear would want, right? Which would be to kind of have the alternative divergences, not the bullish ones. Same thing here, man. I think OBV held up really well. This was expected, the sell-off, but like it should have dropped. That's what happened in 2020 as a massive drop. But it did not break down. Like that's super significant. Because we're making lower lows here on the price, and you're divergent, you're, you know, hella divergent here on, I mean, that's really strong. It's holding up on balance volume. So you've got on balance volume 4 hour, you've got RSI 4 hour, you have MACD on the 4 hour, but it's a smaller time frame. But all three of those have some localized and or bigger divergences. This is starting to look more and more and more like it's not, it's a strong and stronger possibility that this is just a bottom, like a new bottom being made. And if that's the case, according to this range, it would need to be kind of a spring to see the follow through, but we would see some pretty massive moves. We still have a gap up at 5. So, I mean, there's some more obvious targets like locally, but that's a big deal. So I'm thinking that at least right now, I don't know what this is. At least right now, this is looking really good. Right, we talked about this. This is odd because someone had brought up the accumulation distribution. But this is also very much the same as what happened in 2020. Like it had a similar motion going into December of 2020 as it does here going into December. It was a little bit off in terms of timing because it was late December when the breakdown happened. It's like going near the 30th or something. It was a really fast slide. We had a longer slide over a longer period of time. It started a little earlier. So my thought at that was maybe it's going to all kind of move forward. That hasn't happened. So that's kind of where the disconnect is on my chart, was that a lot of those things seem to triangulate earlier, but they didn't follow through earlier. So now I'm kind of just back to wondering if it's going to be fairly one-to-one. This looks possible as a rebound. I don't see any kind of major divergence. There's nothing really here to say except that it could be, if it holds, a reversal action. But again, I think this was stronger as a comparison, not by itself. By itself, it just looks kind of ugly. And we talked about maybe why that is, because there's a cumulative build on this particular indicator. It has to reverse like super hard for quite a long time in order to see this really correct, because it's a cumulative indicator. So it's constantly adding back to the same values. But yeah, I think we may see that it has a breakout. I'm not a big fan of this indicator anyways, but I think it's okay as a comparison. We compared it to 2020. We did that a while back. And it was a very similar motion, if I can find the right time period. And this is daily versus 4 hour, so it might be a little skewed. Maybe I should change it. I can't remember what we did before we left. If I did daily or if I did 4 hour. No idea. Probably doesn't matter too much. Yeah, so we looked at, yeah, it's interesting because there's like a massive, you see how like even in the big buy up, the big squeeze, you'd expect that value to be going up because it's a reaccumulation, but because of it's a cumulative indicator, it never really breaches highs again. You know, these are almost distributive top looking things, and it just keeps going down. It's really weird. So as an indicator, it's a bit different. You can't really look at it like you look at other things. It's not resetting, right, every time something happens. Anywho, yeah, similar motion though. After that big push up and drop, it has this kind of deep dive. And eventually, right at the end, when it finally breaks out in January of 2021, even going into the 20th, which is kind of wild because it's going up at that point. Price has already gone up quite a bit from January 5th all the way through January 20th. Prices increased quite a bit. I mean, that's a huge move. And this is still dropping, which is interesting. So anywho, could it be very much the same, similar kind of shakeout here? Yeah, it could be. You know, I would caution us to, again, consider that maybe we're a little early. You know, we don't know for a fact this is going to turn around. We're hopeful that it will, but at the end of the day, like, could it be like a middle S-curve kind of deal here where you still got to go down farther? Sure, it's possible. When in doubt, I guess you can just think about leaps or something if you want to play it and you're not sure where it's going to be in the next 2 weeks. Then don't try. Yes, just wait. But I think, or get leaps or something, right? If you're going to do options. But yeah, that's very similar. Like, I think that there's reason to look backwards in these kinds of things because this indicator by itself makes it look really bad. But if you go back and you look at 2020 to 21, it looked bad. I mean, it didn't look good. It was ugly, really ugly. It doesn't ultimately correct till essentially like here where it breaks out of the creek. This is where we see that indicator start correcting to green. So, anywho, I would say the similarities kind of stop there. I would be looking at this area in 2020 and comparing it to November of 2024. Yeah, that's like the peak. And then, I don't know, it's probably where I would stop to compare. I wouldn't go much further than that for now. Just kind of look at that drop. I'm not really sure what else to talk about with that. This wasn't my favorite one anyways, but yeah, if you had used this as your method for buying, you probably wouldn't have bought in until January 27th, which frankly is like the last day of the squeeze. So if you had just been waiting for this to turn green and hit support and then break out and hold support, you would have been way late to the party. It's definitely not a great leading indicator, in my opinion. You know, are you not? I don't understand wasted memories. It's the first time I've come back the new year. I've been talking about AMC for like 20 minutes. Did you just leave and come back and now you just want me to give you the vending machine answer? I'm like confused. I'm talking about it right now. I don't get it. Hey, get out of there. Son, can you get whichever cat went back there? Yeah, so I'm talking about it right now. I'm suggesting to you that if I'm a bear, I'm definitely making a case right now of going down to 3. I think it's an easy enough case. If you don't break 415, it seems likely that it's going to dump back down to 3. That's the way as a bear I would look at it. But there's no there's no indication on RSI, OBV, or MACD that it's very bearish right now. It looks really bullish. Looks like divergence. And so now I'm just doing a simple little comparison with accumulation distribution indicator. I don't think it's the best indicator, but I had it open, so I was looking at it. That's it. Your confirmation level here is really 415. I think if it breaks 415, you probably hit 450, come back down. You're going to find support, and then it's going to take off. I think you're going to go all the way up to 5. This is comparable to the outer edge of, like, it's like the Big Creek, right? So if you go from the very peak in May to this peak that we had right here in December, hitting that gap fill right now, going into next week, on Monday the 13th, for example, or even as early as Monday the 6th, hitting that gap fill gets you right up to that creek. It's where it should be. I think that was part of the reason we had talked about 485, but I can't recall. It was a while ago. It's a good 50-50. So moving from like the lows here of where we hit at 380s, excuse me, I said 485, I meant 387. 387 up to that gap fill is a really solid 50-50 to get you back up to the top of the range if it holds. So the setup is here. So I'll say this, you know, from the perspective of a bull, I'd be looking at two possibilities. So one possibility as a bull is that this is a very, very short bull run, and it really only goes to like 5s. Maybe it kind of stops right here and halts around 5. It just fills the gap. I would look at GME and say the similar move would be going up to like 37, or maybe even slightly below that at 36. Because technically, again, that's really where I look at this and say, like, that's where the top parallel is. It's in the extended hours. And so it's not going any further, right? So if I'm thinking that there's not going to be a big move, I would suggest to you that AMC could move $1, which is still far. I mean, it's like a, 25% move. That's a big move, but it's not huge, right? And similarly, GME goes from like 30 up to like 37. Okay, so if I'm a bull, that's like possibility 1. Pretty low-key move for both. It completes the S-curve on GME but doesn't go any further. And it completes the outer move here on AMC to that outermost creek but doesn't go any further. It also fills the gap on AMC. That's it, okay? That's the more like conservative view here, like the hyper-conservative view. As a bull, if I think that it goes further, I already talked about this quite a bit, quite extensively. I genuinely think that it's very possible, and I have it marked off here to like January 17th. It seems crazy, I know, but I don't really care. I think if you're really, really hyper bullish, I think genuinely you could see this going to $20 pretty easily. I'm serious, because we had already made a case for why that would be. It was like it's like 1960, okay? And it had to do with the shift and the fact that they shifted that gap, and the original targeting area for that gap was early, or is, I should say, early 2025. Sometimes I walk away from the market for a little bit, and I think that when I walk away and I come back, sometimes I look at my own stuff, and I can see why. I definitely can see why sometimes people look at this and they're like, that's crazy. It doesn't make any sense. Because sometimes you come back and you're like, well, I'm looking at it with fresh eyes. Where did I even get this from, right? And I have to kind of know in my brain that, like, if I trust what I did and I know why it works, then I have to just kind of stick with it. Whether or not it pans out every time is a whole other question. That's a different question in my mind. I don't think it needs to pan out every time. So you might say, well, then you're just guessing. Well, no, it's like educated guessing. Anyways, my point is, like, when I came back and I looked at my charts, I definitely got that feeling of like, oh, like, this is kind of strange. Like, this is a really weird way to look at the market. You know, the way that I do things sometimes. I think that it can be very difficult, perhaps, to make those cases. I make them on here every day. What I'm looking at here specifically is a triangulation of gap fill, and it does happen quite a bit on AMC, and does happen a lot of places in the market. The triangulation of gap fill has to do with like a supply drop. So there's a level back here that we lost right? And that did happen. So this isn't like, this is just a fact, right? So this is back in August. We dropped off this level. We haven't seen it since. And for a little while, I had thought that this was skewed or something like that. The more I looked at it, the more I found that there was consistency, but it was shifted. There's strong consistency with this setup, but it had shifted around quite a bit. Meaning that like there were evident lines that just don't exist anymore, right? But if you shift the chart correctly, they're just there. Like they work really well. So I spent a lot of time when we had that, because I was confused by some of the numbers they were putting out when they did the dilution. I spent some time looking at that, and I came up with what I found was an adequate shift value, which is like roughly 26% or something like that. I can't remember exactly. It's like 2636, okay? 2.2636, which is like 226.36%. And that shift value kind of clicks everything into place in a much better way. But even that, it's like, how do you explain that, Booksy? I was like, I can't go back and explain it succinctly. That's maybe one of my bigger faults here, is I did not create an easy to follow stepping stone to replicate it, which isn't really what I want to do. It's just what happened. So anyways, once I identified that, I would normally look at something like this and think it was fairly not nonsensical at all. I'd look at it and say, it's fairly sensible to look at something like this and suggest that this is a triangulation for a possible gap fill. Because much like what we talk about, we just did it on GME, you know, this is essentially like that breakdown level. No, it's not, Booksy. It's not possible. No, it totally is. I mean, this happens all the time. It happened right here in this very past year on GME and on AMC, and it happened back here in 2021. You know, I think it's a matter of like how you look at the triangulations themselves and like where you're kind of pinning them out. But these are directive moves. They're not necessarily going to hit perfectly if you don't do it right. That's just user error, and I'm prone to that. But like that is the trajectory that's being pinpointed for a later time, you know. And again, is it perfect? Maybe not, but it's really darn close. And that bleeds into other stuff that I've talked about before. Like the whole idea of this master sequence that I've talked about isn't really a sequence per se. It's more of just a pattern of how these tops and bottoms are set up for waveform analysis. And the cat ears are like that, right? So they tend to, not always, right? It's not perfect because, again, depends on what's happening on a big picture, but they tend to kind of delineate, if you do get the breakout, they do tend to show you where you're going to go later. You know, if I looked at this, and this is a general wave up, wave down, what is most typical is that these two tops, not necessarily the peak, but these two tops end up showing where the wave is going to go later on jump, right? And then likewise, you usually have like a middle here, and this typically shows you where you're going to come back to. We're seeing it on a micro level presently. We're coming right back up to 415 on the micro. That's the intersection of that triangulation. It's a really straightforward one because it's small and simple, but it is there. So we've already made, it makes sense. It doesn't have to be that complex. It's got support, 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 and then it broke down resistance. Well, it's going to come back. Market's going to want to come back and check that. There you go. You also have a higher support here, and that would be like, oh, we could come back up and check this higher support. Where does that go? Right there, and that would be back to 415. It's kind of like right back to the top where that drop happened. This is a triangulation. Like this is exactly what I'm talking about. So this right here, if you look at where that goes and where it intersects the drop zone, where it dropped off, it's pointing you, it's essentially giving you like a waveform mapping of like where you might expect to go. There's a lot of other little rules we could look at with that, but this is the basic idea. So when I see something like this, I'm like, it seems pretty likely to me that it could come back up to 415, 417 when it hits what? A parallel? That's not very controversial, is it? No, it's not. Now there's all kinds of fun stuff we could do with like a bigger one, like the bigger wave here. We could break down that wave and do the same thing. We could say, is there a trajectory here, that also kind of matches? And the answer is, yeah, there is one. It's right there. It's not make-believe, it's real. Like there's a hit here, there's double hit on the left side, double hit on the right side. It's a little bit more of an area, but there it is. So that's the wave up, wave down, coming back up. So these become very likely high probability targets. When you break above those, that's really where you see what I would call like a change of character. That's where the buyers come in. This is where you get the big buy-ins. This is what happened in 2021. It did the wave, but then it continued. It broke out of the creek. That's where you know, like, hey, this is it. That's your confirmation point. So when I look at something like this, and then I go back to the macro scale, this is where I'm deriving that now really high target from, because essentially I'm looking backwards at what happened back here, and I'm like, yeah, I don't know, man. There's like a pretty massive, obvious wall that was built for 10 months. We spent a lot of time building it, but when we left it really abruptly. Then we had this reverse split. So the issue isn't that it doesn't exist, it exists. The issue is that we had a reverse split and it shifted the chart around. So how can you be so sure that it's going to come back up? Well, I'm not 1,000% sure. You never are in the market. But it's not unreasonable. It's completely reasonable to look at something like this and suggest that, yeah, this is the trajectory for that wave. This is the breakdown, and then it would eventually come back up. When you go back and you add the shifted value, this doesn't seem as bonkers. It seems pretty reasonable, because you can see with the shifted value what this looks like. And I know it's a little bit difficult to see. It's that gray chart right there. What it looks like is it's breaking out and going back to fill that gap, which it never filled. So the first one that pushed up, which is right here, right, comes back and tests like the floor or close to it, so on and so forth. Tests other things too. Tests the bottom of 2000, and there's a huge level right here that was checked, essentially, right there. Right? But it never filled the gap that was left behind on this drop down. It just doesn't really, it's like if this had never shifted, I don't think we would look at this very skeptic. I would not be skeptical about it. I would be like, yeah, it's probable if it pops here, it goes back up. And what's really interesting about the overall setup is that with the shift value, there's a very distinct creek that we just bonked our heads on. Like we literally just tested it right here in December, and jumping it is just coming back above, in this particular case, that top again. If you come back above that top again, you're over that creek. That's a huge historic creek jump. Like that's the creek that goes from August 2022 down to July 2023. So when the shift value is there, if you were to agree with that and you said, yeah, I think that's correct, this would just look like a breakdown here with a possible kind of double bottom, like a push up with an LPS bottom here that then goes back up and tries to fill that gap. It's just a simple triangulation. It does triangulate to January. The thing is that value has been shifted. So what's really fascinating, in my opinion, is that if you take that and you look at where the gap was created when the reverse split happened, right here at 1960, it's the same level. That's right here in this little pocket. You can see the shift right next to the original gap value at 45. So why not just say 45, Booksy? Because it's not 45. That would be not the truth. Like, I don't think that's the truth. I think that it's shifted. I think that's really important. I think they moved it, and I've already talked about this quite extensively, but I think they moved it down to a shift value that works really well with the chart that exists. So that it meets up with all the parallels really nicely, because they basically just used, for lack of a better analysis here, I'm just going to quickly do it. They basically used this value right here. And that value is consistent all across AMC. So they shifted this chart down like this much, roughly. And that's the value that's used everywhere, like as a level. I don't know exactly what you would want to call it, because it's percentage-wise, it kind of just depends on the way that you would look at it, right? I mean, some people don't look at logarithmic charts, they only look at linear charts and so on and so forth. This essentially is like the stair step levels for AMC on the whole. And each of these is like a walk-up level, and this is like the original all-time high, and then it's like 100% above that is like the new all-time high. And so these are like equal parts. So they use that value as a really nice, neat value. Maybe Adam Aaron and his team knew that when they did the reverse split values, because they did have another micro split in there. I think it's just math. I don't know. I don't think it matters that much. I think it's just the math of it, and it just works really neatly. So anyways, that's essentially like the shift value that you get here. And it is pretty darn spot on for the most part. So what's cool about this is that when you look at that and you take that same exact concept, but you don't have the shift, well, okay, so you think if it broke out there and went up and filled that gap, what would that look like locally? And it's pretty interesting, because this particular value is very, very similar to jumping the creek where we're at, right at 5. It's like right where that gap was created would be where that creek jump is on the shift, right here. Right there. So taking that into consideration, if you go from where that shift value is and you pull it down to where we currently are, and you guys, I know it's like end of the day, it's already over, but you go back to where that gap value is, it's right there. And this is where I'm like, all right, if I'm setting up a chart that's based on shift values, it has to then work correctly. It has to make sense. And it totally does. It's the same exact percentage value from the breakout at 5 up to the gap at 1960. It's perfect. So I don't think it's a coincidence. In addition to that, we did a wave in, wave out here, and we used 45 degrees on this chart. We talked about that because when you go back to 2020, and I guess it was measured from the breakdown here, but basically this whole thing is like a perfect 50-50 around the March drop in terms of like coming back in and reapproaching those levels again. It's really interesting. And so we did it 2 different ways, and we looked at, it was really from back here, I think, way back, like 2018, really similar to what we see in, I think it was this drop. I'm sorry, I keep messing it up. Yeah, it's this drop. Because there's a nice little gap value that occurred in 2019. This ends up being a proportional exit, so it's a wave exit. So it comes right back out in that wave. And this is all like a slingshot around the midpoint of that intersection. You can see the 50-50 here. It leads you back up to the top. But I thought it was accidental. No, I don't think so. I think there was at least mathematics behind it, and then it's a 50% retracement. If you look at the full move that this big January push-up has, it almost doesn't make sense. It's like a 786 or something, but there's other ways of measuring it anyways. It looks like a deeper retracement, but when you just go back to where that gap level is on that breakdown, and then you look at that in comparison to where ultimately where the retracement is and then where the top is, it's significant, because that's in a lot of ways it's more accurate, right? Like we stopped going into 2021 tops before the January or the June move, we stopped at that gap. We didn't stop at the top, right? Like this is where it's built out. It goes all the way back to 2017. If you look carefully, it was really interesting because then you take that into consideration and you look at where this is, and it's hard to not see that. Like, oh, so it built out like a long-term sideways action, right? That eventually hooks and gaps down from that level and starts a major walk down. And sure enough, when we use the appropriate angles, it matches. It matches the same triangulation. So there's a lot of crazy, maybe out there math kind of things. I think a lot of people might look at it and say, I don't know how you got that. But I know that in my head, I'm like, I know it works. I know why it works. And I know what they would be doing. If this were not shifted, it would look way more sensible, I think, in a lot of ways. So yeah, I went from being like kind of bearish, like semi like conservative wise, like I don't really think it's going to go beyond the 8s. There were a lot of good reasons for that. 869 came up quite a bit. We originally had a lot of 1380s because of this top over here, and a lot of those angles do go there. But I'm fairly certain that if it does want to triangulate towards this gap fill, that it could see 1960 in early January, by mid-January, which is kind of crazy. So I get it. Like I totally get it. I get where people are like, nope, not going to happen, Booksy. Appreciate it though. I'm like, yeah, I get it, man. I do. But like I genuinely think the setup is there. It's hidden a little bit to some degree. Now, some people are going to say, well, then why not just go to 45 if that's where the true gap is? Because it's not really there. This is a valuation chart shift. So this has to do with perceived value in terms of like market cap. That market cap gap is now down here. So it's important to note, like the way that I'm talking about shift value has to do with valuation. So that is not equal to this now. Or I should say that is equal to this now, and it's lower. So like if I go back and I look at popping to like $18, and then we were to do some kind of mathematical comparison to what the total value was for AMC as a company back here before the split, before the combination of APE, it would be roughly the same. It's difficult to do that math live over and over and over again when I don't have like the simple formula except for the percentage. So anyways, point being, I think this is a wave back up to actually fill the gap at 45, but it's going to be the gap at 1960. Now the rest of it is a bit different, you know, and that's assuming that it makes that push. So I would say as a bull, I've got two strong possibilities. One is a very weak push that goes between 5 and maybe 565 and then fails. The second is kind of huge, like hugely significant. It almost doesn't make sense, but that's where it is. If I look at this from an RSI perspective, it definitely seems like that's a possibility. Like I can totally see this squeezing all the way back up to this yellow line, easily making it back up to like 88 on 4 hour, for example, in one huge motion, considering if this holds, much like it did back here on a divergence. I think it totally could just go right back up in some massive kind of squeeze motion. It's also a parallel structure. I don't want to get too much into that, but it is a parallel, like going from the bottom to the top here from where we are now. My big concern about that was that it dropped the parallel. So I mentioned that like right when we came in, that it just didn't really look awesome from that perspective because technically it came below it. And that's why I think it's super, super, super important to not like say, oh, it's definitely going to go. I'm going to buy, you know, mortgage my house or whatever and buy everything I put. I mean, look, man, if you did, you could make tons of money if it happens. But if it doesn't happen, you're going to lose a lot. You never should ever put more than you're willing to lose. That's my opinion, not financial advice, but you might see it as such. I mean, it's kind of straightforward, right? Don't put in more than you're willing to lose. But I think that it's so critical that this gets above here, right? 415. If that doesn't happen, there's really no way to to be sure. All the other stuff is conjecture because all the other stuff is based on comparisons and based on indicators that technically can't be 100% reliable. They just can't be. They're not all leading indicators. So it's like it's an amalgamation of data, right? You're kind of deciding what you think is most likely. And I'm comfortable with that. Some folks, they think it has to be all or nothing like all the time. They're not comfortable with probability percentages, ideas about things like that. So for them, it's black or white. You're either right or you're wrong. And I get it. I mean, at the end of the day, I guess that's always the case, but I didn't really want to talk about MPW on stream, but it did pop, quite a bit. It is at 415. It's a similar number, kind of interesting. I don't know yet. I feel like it needs to get above 440, and that hasn't really changed. When it first dropped 425, I felt like it needed to come back up and get above 440. I think that's roughly where the wave is. This is a very loosey-goosey wave. You can kind of mess with it and sort of fit your needs, but I think that there's a decent or to strong chance that that's right about where it needs to be. So if this can manage to push above, and you can see this triangulation is just completely backwards. Like this ends up being like a low, not a high, which happens. We've seen that before. It's not the first time, and it probably won't be the last time. But I will say this. If you're just somebody that likes playing technical patterns, this is a breakout. So this is a technical breakout. This is a long-standing wedge. It started in September 2024. It ended basically yesterday, going to Thursday. I mean, it's right there. If that breakout holds, that is a decent chance that this is going to go all the way up to at least 570. That is a very strong probability for this breakout. It's a 50% move, so it's not insignificant. It's a big move. There is a like an intersection of important points here in that same bracket. At 560 is where the top is that came down in 2023. So kind of like what we were talking about with AMC, you think about like drop levels and things like that. There's absolutely a lot going on between 556 and $5 on MPW. And it would make sense, given that we've kind of tried to push above that twice, to go back and test it one way or the other. If it rejects, my thought is it's going to spike. It may even hit the gap fill at 620, and then it probably just dumps back through here. It would end up being right back beneath 5. If it comes back down beneath 5 after pushing out here, it's hard to be like, yeah, it's going to keep going, right? I mean, it's just difficult. It's a difficult case because it would be like a push-up that once again is like a push against resistance that fails. But I think if it can push up above and then come back down and hold above 5 right here, there's a really strong chance this is about to just squeeze. And much like the other two that we've talked about, it is off right now. It's not following its S-curve. It doesn't look like it's going to follow its S-curve. I measured it out a certain way. I could be wrong about the measurement. It could be farther out. But I got to say, like, it's very likely, based again on that idea of like triangulation and like where this stuff could happen. It's not perfect. It could be a very, very quick move to near 8. I will say, though, that in large part, a lot of the things that I've seen on MPW have made it appear more like AMC in 2020, except this particular pocket. What this tells me is that if this were much like AMC in 2020, that it would be a longer term setup. So if it were to push back up, for example, and then failed, I would look at it as like a failure to cross this triangulation, right? It wouldn't breach high above 430. It would have to do something like this, where it essentially like holds this and then breaks down again. That would make it still kind of have the appearance of 2020. But it lacks some of the same features. It doesn't have the quadruple bottom thing that 2020 had for AMC. Timing wise, it's way off. You know, this beginning part looks correct up until now, and then it kind of just appears that it just didn't do the push up. I was expecting there to be a shoulder here up to 515, and that never happened. Because I had looked at this as like, oh, it's going to wind up and then unwind. Well, on RSI and some other indicators, it looked like it was there. But oddly, like it's right here, you can see it. Oddly, in this price action, it just doesn't. It stayed as a wedge. I made a case that when you look at the big picture and you consider this as a possibility of an accumulation fractal, essentially like the master fractal, this actually looks really, really, really good. This would be like the second push followed by the sell down to hit the low liquidity, and then it would just pop and presumably again go all the way up to probably meet this top line. It is again a crazy big move. I don't think given all the stuff that I've said about it and how cruddy it's been and the fact that it's had all kinds of issues, it's been a really tough one for me to sit here and be like, yeah, it's going to happen, you know. It certainly doesn't feel, you know, like, oh, it's definitely going to happen. But at the same time, you know, I wouldn't be surprised at all if during this, and it's already broken out here on RSI, I was kind of waiting for that to happen. I kind of missed it, I guess. It did happen right here. Yeah. I would not be surprised if this squeezed like crazy far for its own chart. Not like going to the moon kind of stuff, just moves really far, like fast, according to its own chart. I think it's very, very possible. And I had mentioned this before as a big potential squeeze play. In the end, I don't think it's for everybody. I don't think everybody's going to want to play it, but I do think there's a really good chance that this is going to go. So, yeah, that's where I would kind of leave it. And for now, I'm just kind of watching it. It broke out. Conservatively, you would say probably is going to go up to like 560s. It's going to come back and test this mark here. Beyond that, you may not know, but that's still a big move. It's 50%. It just broke out. It's easy to trade. If you want to trade it with a stop loss, just shares only. Simple enough, right? Pretty straightforward. It looks like it's ahead of earnings, so, you know, part of me is wondering maybe this just pops up into February and ends up being kind of weak and doesn't really go anywhere, and it just kind of chills out underneath here going into February. Totally possible as well. But for now, I'm like, yeah, it's still a breakout. It still looks good. There's a possibility this is a pretty massive turn, and we'll see, you know. I have a lot of maybe unwarranted confidence in this chart because it's done some of the stuff that we wanted to do, and then other things has been like, bleh, you know, not the best. I think this is the big thing for me. It's not necessarily an S-curve. That's kind of a misunderstood way of looking at that, because the M can go up into an S-curve or it can go down. If it goes down, it's not that the S-curve just isn't there, but it's also like that could be your exactly like with what we saw on AMC back in 2020. It's kind of the slingshot, right? This is complicated. And you see that all the time on the waves. I mean, I'm not really sure how else to describe it. We kind of talk about it every day on here, but like if it doesn't make the break, so for right now I'd be like, well, it could be just doing this. It's gonna go down again, yada yada yada. But then when you look at the timing of it, it's like really interesting how this ends up coming back up. Like the triangulation isn't just back here on the breakdown like we talked about. It's actually here as well in the low, and then that gap level. That's really interesting because it leaves it behind and then it comes back to it later. And this ends up being like the long-term overall kind of wave. It's established like right in the beginning of. So I'm curious because MPW's is very similar, but I would suggest that it might be a little like slower by comparison. Like where AMC's took place over the course of like 6 months, once it finally got moving, I'm not so sure about MPW. I think it's got the potential there that it could be much longer winded. So there was a wave that's real long that looks like it wouldn't end until February. That's this guy. I mean, it's super boring. That would take forever. You know, there's certainly a trajectory that does not quite match that, and that's very much in contrast to it, which is interesting because it doesn't have the same triangulation, right? So I find that to be kind of peculiar. I'm not really sure what to make of it yet. Maybe nothing. You know, I'm not sure. And that's okay. If you're looking for a good long-term play, if this thing stays below 4s or whatever, 3s and 4s, 5s even, for a time, it may be a while, but if this ends up breaking out and you're looking at this overall, it's got an 11.8 like price to earnings kind of thing. I think it's supposed to be, again, like right up here is where they left it, right around 12. And so there's a lot of analysts that are saying that it's not going to go far this year, and they're not wrong. I mean, that was back in 2024. But even in like 2025 estimations, there's a lot of folks that are like, I don't think it's going to go that far during that year. But if you look at the overall, like, where should it be kind of question, it should be up here. It's still undervalued, like incredibly undervalued. So I may not have picked the best squeeze play that didn't turn around massive profits, but long term, it's a very simple play. Like I say should, but you shouldn't really say that. It is potential here is set up very, very high to have a massive return over time, which is great. I think it's a good place to be if you're trading. So what if it goes bankrupt? I don't know. It goes bankrupt. I don't know. Beats me. Let's look at IWM. WTO. Yeah, I was going to look at that. I'm a little bit concerned, but I'll tell you in just a second. I'm not trying to like hide it. Let me just throw this out there real quick. And yeah, this looks like a retest of the creek. So there was a creek that was established here. I don't know why it's pointing that way instead of on this. It should be on this mark, but whatever. It probably was because I was like looking for a triangulation. So it looked like it was possible it could go down as low as 213. We suggested that maybe it stops at 218. If it can hold that support, it should be fine. It did dip beneath that yellow trend, which is like a long-term, long-term trend. So that's a big deal because it did check it. It dipped beneath it to 218, almost on the dot. It kind of rebounded. It's not impossible. I know it's easy to say like, well, if it jumps the creek, it's over, blah, 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 blah. Maybe, this is a lot like what happened in July, where it has this dip that goes a bit too low. And it was hard for me at that time to be really bullish because it came down farther than I expected. I think this is similar. You're seeing it just now. So it didn't go as far as I thought it would go, but it came to the first mark. You're seeing it just now jumping that creek. So triangulation wise, I would say it's going to go up to, pretty likely going to go up to maybe 230 first. So IWM looking like a good simple $6 move, because like, that's a big move. Yeah. The way that these things happen is always the question, right? It's like, it could be very simple. Like it jumped the creek, it hits the creek, goes, done. End of story, goes back to here, it's over, it meets the triangulation, so on and so forth that we're talking about. But you can't always be like 100% sure if it made a low here that that was definitely a spring. I want to say it looks like an auto reaction phase B top spring. So I want to say just glancing at it, it looks like a 1, 2, 3, 4 with a push out. I would be waiting for it to come back above 226. And then that would be a really simple place to be like, yeah, it looks really strong. The trade then is from 226 up to about 231. So it's a good trade if you want to make it. But you'd have to wait for that SOS, and that would be coming back above a bigger creek here. So it looks like the SOS kind of lines up with, it's really clean. It lines up really well with a jump over like a more major creek. So like a return back above 226 would be hugely important for a confirmation for IWM. I'm going to make an alert because I might trade it if I have some liquid to trade it. That looks really simple. Like comes up here and then pushes up again, goes back up towards 231. I'm sure there's some gaps that I'm not seeing on the chart up here, but I wouldn't necessarily go beyond that just yet. I think it'd be a good entry point for sure. And then if it held and breaks out again, I think you're likely going to see it rally pretty far. We've talked about 250s quite a bit, but I think the last time we looked at this, we were saying it may be like 270s. There's a strong angle here that leads us to like 270s. So if that ends up being the bottom, I think we could go way up. So it could end up being like a huge move. And this is a pretty massive sell down, really, really massive volume, which is good. May not seem good, but it's good. If this can now get the pickup from buyers and start advancing, that would be a really strong bottom. Worst case scenario on IWM, I guess, is that it head fakes to like 232. I think it would probably do that no matter what. And then it would break down and then head back low, which is more in line with like what we originally thought here, I suppose, for a possible bottom lower. That's just to go back and get a gap. And I don't think ETFs always have to do that. It also shows a little bit of weakness because it'd be coming back beneath that daily 180. So that would be like a bigger kind of spring motion, maybe in light of like an ABC correction down to a much broader creek here. It doesn't have to be bearish. It could be very, very bullish. It's January 15th. I don't know. When's the inauguration or whatever? Probably around there. Wasn't it like second week of January or something? So you never know, man. It could be a setup that works like that. But I'm not bearish on it. I'm just saying like that's just where I think it could go potentially before taking off again. And it is still triangulating that bottom even now with this creek. So I'd be careful. Anyways, decent trade from 226 to 231. Maybe goes way beyond that, but also could drop first. So it's a tough one. You just have to wait. You'd have to wait till 231 anyways. That's neither here nor there right now. And then like we can wait until we see it. WTO. What is going on with this thing, man? It's a rally like crazy. Yeah, weirdly, I had drawn this trend. I don't remember drawing this, but I don't know. Kind of looked like it followed it. My big thing about WTO is it kept flushing up and down. So it was like it would flush up as if it were going to break, and then it would drop through to a new low. So the issue that I had is it's not holding its supports. It does appear to me that this looks like a decent buy-in, but it's very similarly like kind of rallying up to a creek, and it's a widening, which is fine. Slightly widening. It's not the strongest. I'm kind of looking at this motion right here. I don't know, man. It might be fine. Kind of down on this one for a while. Yeah, I think it's just another example of like good triangulation can give you some really crazy good moves. There's definitely a possibility here given what's going on here with RSI. I'm on the 15 minute, which isn't exactly the best. Let me check that out. I don't want to say something that's completely wonky, but yeah, I don't know. It's a bit of a squeeze from 25 cents up to 40 cents. At this point, yep, I think that's going to be the main support. So it is hovering on it right now. It's like chopping right along it. There's a mark here when it broke down on the 26th of September. I think that 51 cents was really, really important. It's just very significant. And then the secondary mark is at like 48 cents. But you're like, why not 50 cents? Well, it didn't actually hit 50 cents the way you would expect it to. It did not. It kind of hovers around it. It's there. You can tell that 50 cents is a psychological level. But the level itself is like 51 right here. And that's where the major hook is on that breakdown. That little S curve. That's when we started looking at this play. We were saying we thought it would come back up. It didn't quite break up. It never broke out. I think we looked at it. Yeah, that was right around the time. There's a lot going on here. We talked about a lot of things early on. But this was the first big move. And it never came back above 50 cents. So it got kind of stuck. And then it just iterates again. It does the same thing. Tries to break out, but it can't break out. It actually has like a triple up thrust here. This looks almost like a desperation kind of move because it came up really far. Weirdly, RSI stays very flat. It's starting to look more like a classic bottom structure with a wave out. So like a wave up, down, up, minus that guy. Yeah, and then the rest of this is kind of history. You can see it's come back all the way to the top, 43 cents. And in post-market, it's flying. It's at 45 cents. It's squeezing a bit. So I don't know, man. I think if it gets above, I have this bigger channel here. I think if it can get above 46, it's got a decent chance that it's going to just go. And I'm being very serious. Like I think 46 up to 51 is going to be the hardest place for it to advance. You can see, at least last time we looked at it, I said I thought it might go from the bottom here all the way up to triangulate around 51, maybe by January 15th or so. We're kind of getting there. That is still like the most critical point of the current chart. It's a widening, but the widening starts at like 51. So if it breaks out, it's not exactly like necessarily flying to the moon. What else is there? I don't know. There's nothing really else here. There's always a chance of like a 50-50, but I have to warn you that that's not a really perfect way to look at things, you know. What I would suggest to you is that at this point, based on where the bottom is, and it's pretty low at like 25 cents here, and then where that angle is, like we think that middle is at like 50, 51. The percentage is 50-50 up to $1. So it's very possible that that at least bulls to some extent are trying to get back to this $1 marker. Seems very likely. And frankly, if it hit $1, I would probably be out. Now you might say, well, how's that possible? Because shouldn't 50% be at 50 cents and then 0 be... No, it has to do with percentage value, right, versus itself. So mathematically, 24 cents, 25 cents, right, that's double. So 25 cents up to 50 cents, that's double. 50 cents up to $1. So is it mathematically possible that this 50-50 is up to $1? Sure. Does it have to? No. And I honestly don't know if... Hey! She's playing with a toy. Never mind. I just don't know if this is like super feasible. So like right now I'm like, meh. It's definitely possible. And guys, if it goes there, I'm going to be pretty stoked. But I also don't really have a huge expectation for it because of the nature of what it is. It's a Chinese stock. It's like we're entering a new presidency that he's talking about tariffs and stuff for Chinese stocks. So I'm like, do you want for Chinese companies? And that doesn't necessarily mean anything for this one because it doesn't even deal much in North America anyways. It's like third world country kind of stuff. But I think it's just a matter of perception, perhaps. In the New York Stock Exchange, you're going to have people that look at Chinese stocks and be like, well, he's going to put tariffs out there. Like, I'm not going to invest in it. Whatever, you name it. Anyways, do I think this is a possible good play? Sure. I'd play it up to 80 cents to $1 if it goes, and that's about as far as I go. There's nothing bad about what happened here, but I missed it. This is like a Christmas move. This was like, Merry Christmas, we're running. This was on the 24th, and it ran up. Now we're kind of just sitting on the top, and I'm like, I don't know. It's got to make the next leg up, I guess. That's not very helpful, but I already missed the move. You guys are like, you missed it. Well, I mean, I'm in the play. I have shares, but I wasn't like actively watching it or trading it. So yeah, I missed it. I missed that move. Goodness gracious. Hey, be quiet. Goodness. Yeah, I think it broke out back on right here. Right around the time I left, it was starting to like squeeze out. Because I had drawn this guy right here thinking that was where the creek was. And you can see it jump that creek on the 23rd. So it was been like the day after I drew this. Laid up, pounced. It looks good. I mean, if you held on to it this whole time, it was a risky play. I hope it pays off and we can cash out soon. Like I said, I'm not of the opinion that it should be held for a long period of time, but frankly, again, just looking at this overall setup, I found it very difficult to judge how far it should go back up. I think we had some ideas about where it might break, if it breaks, and it finally got there, but I don't know about the upside because the history of this chart is strange. Most of it's built on this trend here, I remember, and we talked about that. It does not seem, to me anyways, like the company in and of itself warrants some kind of great awakening. So it's hard for me. I like look at it, I'm like, I could totally see why this would just stop at like 55 cents now. But I get where, okay, well, if it keeps going, then where's it going to go? It should go pretty far. That's not really helpful, but it leaves a massive, opening here for later. But I just don't know if that's going to be like a now thing or like a way later thing. So, anywho, simple enough to understand is that if it holds where it's at, it's going to have some trouble probably coming into this area above 50 cents. I think it's going to be even dicey before then, around 46, going up to 50. If it can manage to get above that region, 50 to 60 cents, there's a decent chance here that it's going to squeeze up to 80 cents to $1 because of a lot of things, but not one of them being, there is a gap up there, but it's also, and that was after the split, Also that, yeah, there's some triangulation. This is really early stuff that we pulled out that we kind of didn't use, but that's still there. And it would suggest that you could get there by February, roughly. We haven't used it in a while, but it's still there. That's where the breakdown at 51 happened. That's where the bulls were trying to go. So maybe this guy right here. It's weird to look at stuff like this because it's very, it doesn't feel very organic. Like, I know it's the opposite of, it's kind of the opposite where it's like, well, if it's a, I don't know, man, if it's a penny type stock, then maybe it's more organic, but in reality, it's kind of like, meh. There's more shenanigans sometimes. That's another one at 70 cents. It's a lot of targets. Here's what I hope. I hope that one day we open up the chart and it's at like 70 cents and you don't have to question it much. You just decide where you're going to take profits. Right? That would be the best case scenario. I'm going to put an alert back here at like 65. I'll probably do another one right here, 48. That could be met by open if it just keeps going. Well, that's it, guys. I mean, it was a short day. I didn't really want to go into too much stuff. I know I missed a lot of things. It's a catch-up day. I wanted to kind of get back into it and just warm my brain up a bit. New Year's, we'll do a proper New Year's stream next week. I'm gonna see if I can get a get some time this weekend to clean my charts and just reset them. And we'll talk about goals for the new year and outlook for the new year, and maybe review the whole of last year. It's interesting looking at AMC and looking at where it was like last January versus now, and it seemed like so much has happened, but it's pretty much in a stalemate. You know, it's not really moved very much. Like in the course of a year, it's dropped. You guys are like, well, it's moved. I know it's moved, but I mean that it's just kind of interesting to see a year over year look at the chart and see how little we've accomplished in some ways. The whole year kind of just looks like a big double flush, you know, around. This is January right here. It's like barely moved at all. January 8th was at 480. January, like next week, if we're back at 450, we're basically in the exact same spot that we were a year ago. It's really strange. The whole year just looks like a big like wraparound 5, you know, so it's just fine. It is what it is. I mean, it could be worse. You guys are like, no, it couldn't. I mean, it could be worse. Always could be worse. That's the year right there. January 2nd is right there. That's the week of. It's at 512. So, yeah, I mean, the whole year just kind of looks like an effort to sort of get around that wall, and it didn't, unfortunately, it hasn't really paid off. But all the more reason to be excited if it does, because it's even that, I'm like, wow, that's kind of crazy how tight that is. That's the week of Tuesday the 2nd. Closed at 517. Yeah, look at that, man. That's wild. Look at where that is now. If we got to 517, we'd be above that creek. Everything's like pretty neat. It's pretty fun to look at that year over year. You're like, it's not fun, Boosie. It's horrible. Well, I think it's fun. That wasn't actually January 1st. January 1st is up here on the chart. There is no January 1st. Looks like Tuesday the 2nd, naturally, because of New Year's. It was at, open at 609, closed at 611. That's pretty close to where I thought the middle was, too. I think we talked about this before because it was like 613 or something. We thought that might actually be the center of this structure when we looked at this structure over here. That might actually be the center of it. I don't think I ever really thought about it as like the beginning of the year. It seems like a simple thing to think, but I did not think it. And then the week of the second week, Monday the 8th, it opened at 514. Closed at 529, closed a bit high. That 514 has been probably the most important. That's crazy, man. It's like everything's set up right there. Yeah. So who knows? Maybe that's it. Maybe that was like a year over year. They're doing a full sweep of this area. It would be strange. An exit right here. Head back towards the top. Maybe. I don't know. When you put stuff like that, it always makes it look worse. I always think it looks weaker, but I think it's building out some strength, so. You're like, what do you mean weaker? I don't know, just always makes me think like, oh, it doesn't look like it's going anywhere kind of thing, so. It does look a little weak. It's stuck. Then again, that's interesting. Oh, really weird. It's probably gonna be something dumb like 869 or something silly, you know. It's a little confusing because this actually went up to, it went pretty high in extended hours right here. It went up to like $8 or something like that at the time, but then it opened like $2 lower. It was up pretty far. I would not be surprised. Let's take a look. I would not be surprised if that ends up being like right around 1960 in reverse. I'm just curious. Look at that. February. And it kind of assumes a lot of stuff, but not entirely wonky looking. I think that's an interesting chart. What a weird chart, though. It's always fun to sort of find something new. So there's this like little rule that I made that I don't use it here. I wouldn't use it here. I would use it from like the drop zone down. And this was that rule I made about like the return And we've kind of argued that that already happened, like right here. That was the same move. But the reason that sometimes I talk about that is because this creates like a channel, and so when you go back and you draw like bottom to bottom, if you do it right and it ends up you're in the right spot, this ends up creating like a pretty decent case for like a channel right here, which definitely seems quite possible. So I kind of presumed, wow, look at that. Now it looks like it's jumped out of the channel right there. I kind of presumed that that had already happened. But what's interesting is that if you look at this from another perspective, like the perspective that we're looking at now, like an alternative channel, what if that's not the channel that's intended? That's just like part one. And this is, again, auto reaction, maybe with a bigger phase B kind of thing or whatever, or a markup. That's not the channel, but the channel is less steep. It does make an interesting case for, it's strange, but it makes an interesting case for a higher move. So like a steeper channel here, which is much more similar to what I originally kind of thought anyways. When we first pushed up, I thought we were going to do something more like that. We first pushed up and we came back up, and I was like, well, you could have a continuation and get a second up thrust. It would have had to have been like right here, but it never happened. And another thing that's interesting is that when you look at where that gap is, it's kind of like right in the middle. It's a pretty cool, like, yeah, I mean, it's pretty neat. That gap is like right in the center. Generated a pretty fun little math question. That 1960 doesn't look that obviously centered. I wonder if... Anyways, so there's this kind of rule of thumb with the drop-in values, but I can't really tell where it's supposed to be. I think I would have suggested liquid center, which is like here, which is closer to the 1960s. Or even where this broke out, is like right on the dot. This is like a higher channel that's not being explored. Who knows? I wouldn't necessarily think about like channel like with capital C, just more like a idea of like a range being defined and then again stepping it down. And oftentimes that ends up being your auto reaction, which it is. I mean, that's the same value right there. So I don't know, pretty much think it's kind of done. I don't know, it's an interesting question though, because if you take that into consideration and then you think about the nature of what's gone on since then, it changes the perspective, I think, a little bit of the chart. If you think this is more of like a natural bottom for the chart here, this could be like a wick down to that low. It's really ugly, but whatever. It's kind of interesting. It's going back to 3. There it is. Puxy confirmed it. I don't know, man. Maybe. I mean, we already know, like, if it breaks down, that's probably where it's going to go. No one's surprised. This is interesting. So this is fascinating because that's actually the parallel here. It says 26. I know it should be quite right because it's the same measurement. But you're measuring it from, oh, whoa, that's crazy. Look at that. I was like, what? Look. See that? That's where the, that is the measure right there. That's wild. That changes the perspective a little bit. It doesn't completely make sense because, hey, stop. Maybe that is it though. I think a lot of what we're seeing is I think a lot of what we're seeing is that motion of the, I don't know what, that's like the shift. So like, cause from here forward, it's like projecting down. So like it was built out along this axis coming down. I think that a lot of what we're seeing with these quote unquote trends isn't quite what it seems. You're like, what do you mean? It's just a trend. Yeah, but I want to say a big part of this could be because it's just again, like the way that they're positioning that shift to get this in line with where it needed to be, which I know sounds dumb because it's like, well, it's the same thing, kind of. Yes and no. Where does this go back to? Okay. Yeah. So I think this is just like an original trajectory line. This is a waveform right here. It's interacting with it like it's a middle. Yeah, I think this is like the middle wave. Seems about right. This is where I get confused. Like, if you look at stuff like this, it's like, how in the world could anyone have known, you know what I mean, what was going to happen? It's pretty bonkers. It makes a lot more sense when you do have the triangulation because it looks like it was aiming for, like that looks like it's like hitting right on the money. But if you look at that with the shift, it really just looks like it was aiming towards that shelf. That's just weird, man. It's an enigma, mystery, for sure. This is kind of cool though. What if this is like a picture of, what if this is like a picture of a widening that's still happening? Because you remember when we did that early part of 2020? We did this before, is what I'm trying to say. In 2024, when we started that year, I did a huge like widening. Maybe I'll do it again. Let's do it again this weekend and see what I come up with. Yeah, because in 2024, I did like a massive like waveform analysis, like on this guy. And it looked like there'd be like a huge wave at the end. And that's where I came up with some of the original some of the numbers that I originally had, which were pretty close, like the 14, the 2.5, the 1. All those things ended up playing out in weird ways. Guys, like, we didn't hit one. I know, but then we had the shift and yada yada yada. I don't want to get into that. This is strangely like parallel to that. It's super close. All right, so now I'm like wondering, I'm sitting here twiddling my thumbs, like wondering if, I mean, I don't know who thought of it. I don't think anybody like thought of it first or something, like necessarily. No, so-and-so thought of it first. You're a copycat, Luxie. Maybe. It's always somebody, right? There's always somebody who thought of it before you did. Yeah, there it is. See, that's the shift right there. Look at the intersection right here. That's the shifted value. I think they anchored it around, so it's like a 50-50 basically dropping through roughly, right? So they positioned it and then they dropped it 2 parts around the bottom trend, which is a parallel to the top. You guys are like, that's just the trend. There's nothing special about that. Yeah, but it is important, because you kind of look at that and think, well, if it were to come back to that original trend, if that's the master trajectory, if you will, right here, where would it go? It's not that far away from it. It's really right above us. It's peculiar. There's a little bit of noise here because of the way this chart is set up, but it's right there. $19. No way. No, it really does. It intersects 1960 right there. It's the top trend in January. That would be like recapturing this massive trend. Now here's a thought. What if this value, what if we look at that in reverse from 1960? That's pretty interesting. See, now this resonates with me a lot more, because in my mind, if you're doing a leg, it's got to be like a similar move. This is 2135. I'm really not trying to fudge it. I'm trying to like get it right, but weird, man. I did a chart in you guys probably won't remember, but I did a chart like a year ago now, and I did something really similar, because I wish I could find that. I took that same concept here, that like, oh, you're gonna come back and hit like some value, and I used it and applied it to I don't know if any of you guys are gonna remember this, but I took the same concept right here and I applied it to here. I mean, it obviously didn't do the exact same thing, but it's really similar conceptually. Kind of freaks me out. It does. It kind of freaks me out a little bit, now that I think about it. Yeah, that's weird. So here's what it was I had hypothesized at that time that this was a massive widening of a huge like funnel. Like it's going to be like this big funnel, And this is playing out. I wish I could find that chart. I might be able to find it. I'll do this research on the weekend. If I find it, I will bring it and I'll show you what I'm talking about. But I kind of left it alone for a while because I thought to myself, well, it's one thing to like assume that this could be like a massive connection, but we were really early on still. We were way back here. So I didn't have all the information, and I kind of thought I could be completely wrong. You know, if I'm wrong, there's not really any point in like putting this out there and arguing about it. And the only way to know if I'm wrong is to wait. So you kind of have to just like wait. But a year later, looking at this, and I'm like, yeah, it did kind of play out that way. It ended up being really similar structurally. Yeah, so I wouldn't say I argued it per se. I just kind of had a chart and I based it on an expanding Fibonacci timescale. I could even tell you when it was because I vaguely remember it being in a weird spot, and so I kind of stuck in my brain. It was a trend-based, time-based, Fibonacci thing. Or maybe it was Fibonacci time zone. It was like here to here. Or something like that. Man, it was like pretty close. I have to go back and look. But I want to say it was like, it started, this is the hard part because I'm like, crap. So the first two on the fib are the same, and then it matched, I think it's this, because I think it was like, I don't remember exactly how I did it, but it was like it was a hypothesis that they had built out like a 50-50 between these waves. Yeah, and this is the actual wave. Holy crap. And I had hypothesized that it would come down to like 250s. And ended up being kind of right. It's not way off. Jeez. But there was more to it than that because it was in like the right spot, but I think there was something else. Like I had a concept about these middles, because it was odd to me that this ended up being in the same spot here and here. So that's why I thought we would do something similar here. So this is where I was in 2000, and it may have been right after this even, like maybe even 2023 for all I can remember. Because I remember thinking it was going to be possible that this was going to build out like we did here. Now, in an odd way it did, but it would not have been something that I would have predicted at the time. I thought we were going to do this kind of a motion and then pop. And I thought what was going to happen was it was going to be right here. So I predicted that we may come low again, but make a spring and then pop to like 14 or something. And then it'd be like similar to this guy. I don't know why, looking back on it, I thought it was going to be that early, but I guess I did. Because I remember thinking it could be like this, and then you could have a massive breakdown to like 2. Now, obviously that didn't happen, but it was based on this principle right here, that this was like a 50% zone, and we kept coming back to, it's like right there. We kept coming back to this 50% zone here on the wave, that it happened in the same manner because it's the same fractal sequence. And it did. It did do that. You guys are like, what? No, it didn't. No, it totally did. It just didn't do it the way I thought it was going to do it. It did it right here. And then it goes low and then retests it. This is the same build out. Look, the reason this is important, if you don't think this is important, I get it. It's a little wonky. But we've talked about this like little setup for a long time. And the reason this little setup matters is because it's a very typical setup for AMC, right? Another reason that this matters is because on AMC, something peculiar happened the first couple times we saw this. It was a wave bottom here and here. It repeats the same structure. It just does it much wider each time. And the reason this was so significant is because I was able to derive a measurement based on a lot of things. You guys already know this. This was like the big August move, right? We already talked about this a lot. But this measure on the August move is based on a lot of things, okay? One of the main things was like it was a hook value down to like liquid center here. And that was part of the reason that I used that was because of what happened in 2021. You could just look at this and just say, well, you don't really need that. If you know where it's going to break, you would just know that that's where it's going to go. And there is a triangulation, of course. We know there's one right here going through the center, and that's partially why this hits where it hits. And this is one that's pretty consistent throughout AMC as an upward trend, yada, yada, yada. There's all kinds of other stuff, right? That's the intersection through the middle. It's no different than what we talk about here in terms of like, oh, it's going to cross through and do like a 50-50 on a wave and then rock it back up and hit that mark, except this is happening within a channel. The weird part, I guess, about it is that in the grand scheme of things, I kind of knew this was possible, but I didn't like the idea of it, so I shied a lot away from it. There's actually 3 of these. So one is here, and that's this guy. And then the second one is here. And I don't like it, but that's this guy here. And so structurally, though they may look kind of different, they're actually the same. So we're experiencing like the same thing, but on an expanding time frame. And this is all pretty much correct. This is the double cat ear top, right? Just like this was the double cat ear top. Pretty cool. Well, it builds out that way on the tops. It's easy to see on the tops, but then when you ignore the fact that there is a bottom that's repeating as well. So when I did the thing I did way back, I looked at this and said I thought it was going to do the same kind of bottom. I don't think I would have expected it to be like this. It's super weak. It looks flat. But it is the same because in a lot of ways it accomplishes the same things. This didn't go up to the top of the trend like this does. So there's a difference. You know, I kind of have, I wonder now if I made a mistake in, I've talked about that chart more than once. I may make a mistake in going back and like just not using it again. But I think it's a good one to use. I should be using it like all the time. This is really relevant. And it's one of the only things that makes sense of this upthrust anyways. There's a couple marks there that are important, but these secondary upthrusts that happened here, and then there's one right here that's really small. Both of those matter, right? I kind of use the first ear most often. It's a bit debatable. I think this is a hairy, hairy chart. Like, I can see why somebody would be like, no, you shouldn't use that. No, you should use this. Do we use the highs? Do we use the wicks? I don't know. It's tricky. Anyways, I guess when I built it, I did something like, created like a 50-50 mark. Like I made sure that it went through like 50%. And I did the same thing here, I want to say, here to here. And that is the 50% mark. But I largely kind of stopped doing it because of that deviation. I mean, it deviated really far. This actually just looks like almost like a recapturing right here when you put it that way. Like it went too low or something. Super weird. Because, yeah, the rest of it's very tight. And then this is like loosey-goosey, like bleeding through it. It doesn't make any sense. Yeah, everything's really good until there. It's just really wrong. So there should be another one. Because this goes through peak to peak. Man, this is tough to do. Anyways, I don't want to recreate this chart, but I might need to, because if I can't find it, then I'll just recreate it. But anyways, there's a wave analysis here that makes sense to me, and it has to do with this expanding sine wave, where this should be the bottom, and then from this point forward, you should be going up. The reason I didn't like this, the reason I didn't use it, is because this doesn't end until like way later. Like, you can't use it for anything else. Like, so I stopped using it because it goes off into space for like years and years and years. And it's like, I don't know how anyone could look at that and say, this is just a massive. But now I'm starting to wonder, maybe that was right. Maybe there's a principle there that makes sense. Because technically this comes back up and hits the top, and then it comes back over later. Maybe there's an idea of like, this is the middle of the cat ear here. This is the middle of the cat ear here. It's the middle of the top. You know? This could be some kind of ridiculously like long-winded middle. What would you guys do if it went to like 20 and then it spent like 10 years chopping down to 2? That'd be so whack. I don't think that's going to happen, but I think it'd be something to talk about. I don't know. Yeah, anywho. So there's a lot going on here. We could talk about the, because you can make this connection, and it actually is a pretty solid like wave line cross from here to here. This jump over, it's like an inversion of doing the one to the upside. You always do the one to the upside on the cat ear, but you can do one to the downside on the bottom cat ear. You know, just don't do it that often. But in theory, it would give you like a similar triangulation. It should. That triangulation should match. So there should be some kind of a trajectory. Yep, there it is, here to here. That's clean. That's probably why it came so low. I think I used this before, and then again, it was one of those things that was just like, it's so far out there, like it just didn't make any sense. And even now, I'm like, it makes more sense. I don't know. I don't like it either way, but yeah, that's so weird. Yeah, this would have been the creek I chose. I use this line a lot. I think this is the correct one for the bottom, and it is very low. So all of this is much more akin to here, where you're kind of chopping through this wave really slow. And it does make a lot more sense of it when you look at it from that perspective, because then it's like, oh, when this came back through, most of the time it spends down here kind of chopping through it. Yep, that's very interesting to me. What you're saying is, I don't know what I'm saying, guys. Why are you saying anything? Well, there's a lot of ways to maybe look at data like this and draw conclusions. I mean, one thing is like, that's kind of obvious to me anyways, is like, well, if I look at this middle, I think about this and I'm like, well, it came back to that middle. So then you look at this and think, oh, I should come back to the middle every time. Did it come back to the middle every time? Kind of. But this one's like real long-winded. You know, these end up being like kind of the middle levels. So maybe that's part of it. Maybe that is part of it. it can come back to the middle without breaking through. If that's the case, then this should be coming up really far, but you had a reverse split, so that's confusing. That changes things. What? What? You gotta be kidding me. Oh, man. Oh, my gosh. Some of you guys are like, I knew that already, Booksy. I had that on my chart forever. Give me a break. Give me a break. All right. Yeah, so that's right. So that's like the halfway point. It's so dumb. Oh, man. That's so dumb, dude. Like, what are you laughing at? I'm laughing because I gave it a I gave it a fair shake. It's the middle, like the gap down, it's not in the right place. I think, again, because of the shift, like there's a problem here. Maybe when ape was introduced, this angle changed or something, and like pitched it really low instead of pitching it a little higher. Because if you look at all the other ones, it's like this angle should point towards the bottom on the channel. So it's almost like from this point forward, even if it were, let's say we're going to do the same thing no matter what, but it was going to go through this bottom, it would have been more sensible to have it pitch through, like, oh, this is the angle and it drops through here, like in June or something, right? I don't know. But it basically creates a double top and then it dumps. It would make more sense to go back through the center. It did it every time, but before then, there's something odd that happened here, maybe because of that shift, where it doesn't do that again. Like, the middle pitch is in the wrong spot. You guys are like, well, I don't know what you mean. It means like it's not pointing the right way. Unless we just haven't hit the bottom yet, and it's really going to go to $1. In which case, it's going to go to $1 here in January. Because like, please no, please no. I mean, in theory, like, it's a double top here. It could be a double top on the bottom. And that's kind of what happened here. There's like a double top, double bottom, double top, double bottom, double top. I don't know. You guys are like, you suck, Booksy. I mean, again, it's a matter of like perspective. On the one hand, yeah, you can make that a case, but it's also a matter of like, well, yeah, but these were distributive actions. So these ultimately, both of these came down again, really low, and then they just pump up enough to distribute. If that's the bottom, then it would beg the, like, kind of self-explanatory. Like, then you would expect it to come back to 19 as it did here. And it did back here. It should come back up and meet it at the top. We're kind of late to the party if that's the case, because it's clearly like not there. Not at the right time anyways. It would have been there further back in November or something. Again, triangulating where it would meet that side. But there is some interesting stuff here, because like this did expand over time. So maybe I'm like misdrawing it, you know? Maybe you have to consider it to this peak, in which case it's right on time. It should be right there. It should be getting there essentially like now. Like it's exactly where it should be right before it pops. It's a pretty good chart, man. I mean, you say whatever you want to say about the weirdness of stuff, maybe, but I think that makes sense. The breakdown is the most confusing part of it. But if it crosses through the middle of a massive channel and it holds that support, it should push to the other side. You know, this is pretty normal market behavior. If you cross through the middle and you usually can hold it, you'll push through. So that's what's happened every time here. There's a cross right here, and then it pushes the rest of the way. Cross down, pushes down. Even here, halfway, pushes down, halfway, pushes up, halfway, pushes down, halfway, pushes up. This is where things get a little odd because it's like really elevated. And here it tries, this is almost like a sign of weakness. And then it reverses. Maybe they were trying to estimate where that reverse split was going to be, you know? That would have been really difficult for anybody. Quantum computer can't do it. What's wrong with you, quantum computer? Quanti, the computer. Yeah, so it's a bit confusing because it doesn't hit the middle. I think that's a really odd anomaly there. It's like it's in the wrong spot. Again, just because I'm being persnickety about it. But in concept, if that's still the line and they just shifted it down here, and that's why it's kind of off in this area, so to speak. And this does look like it just jumped over it. Tried to take off, failed, but it's coming back down to like bounce on it. I don't know, guys. Anyways, it's kind of interesting because I did this chart a long time ago and I did not really haven't used it much. Yeah, I'm going to use that. This is a triple top too, and the second top goes higher. I'm going to use the first mark. Where's the ball? It's not here. It's way over here. I mean, look, in theory, like this is historic. Like this would be, you guys are like, what are you talking about, dude? Like this would be a historic event because this would be only the third time we've ever come back up to check the top of this channel. It is a big deal, and it's not likely going to happen again unless it breaks out, right? It's not likely going to happen again soon if this were an accurate chart. Yikes. It's pretty strong, man. Pretty strong. It ain't perfect. And I have to wonder about stuff like this because I'm like, why is it like constantly pushing higher? Like, why can't it just make up its mind about where it wants to go? You know, should I be using like an average instead of trying to use like peaks? Should I be going through like where the chop is and the drops are? It might be more accurate in some ways. It's probably going to be pretty similar. Like if we take this down to where that drop is, yeah, all three of these drop at the same spot. Drop, drop, drop. Yeah, I think that's a fair way to do it. And just consider that it could go beyond that. Yo! Crazy, man. Booksy, you're bonkers, dude. Came on here to do a little stream, spending hours talking about nothing. I don't know. I think it's important to explore carefully. Certain concepts and ideas. And do it in like a very intentional way. And you don't always have to be right about everything, but even just having the ability to sit there and try out new things in a way that makes sense, it has to be sensible. I definitely feel like this is a very appealing case. And that is the marker. So wow. Now, I guess if I were bearish, I'd be talking about that double bottom first. Like, why didn't that bottom happen? We came down, but we never went low. But I think that's the point. It's like we had already sort of made that. We'd already made that assumption. We talked about that before, like how we thought that it was going to come back, potentially spike here and then come back down, and it never did. So I don't know. Either it's a really delayed action or it's just not going to happen. And that's as simple as it needs to be, because it did already jump the middle. So if it jumps the middle, I don't know. I don't see any reason why it would do that. It wouldn't go back below the bottom and then come back over the middle unless it's trying to, I mean, maybe if it's trying to distribute, but like every time I see this, it's coming through and then it comes back out in order to break back to the top. So it's a very strange thing if it does not go. It would be very odd. So it's roughly a 50% retracement. Sometimes it's a little farther. I think the concept here is straightforward enough. Like waveform wise, I think pretty straightforward. This is where we could go back to like looking at those waves and determining in and out trajectories and stuff like that. Without getting too complicated, you could just draw like a line or a wave here, but I think when I did it, I built a sine wave, a massive sine wave. I should have just like listened to myself a year ago. It's funny how things turn out. Yeah. So dumb. Maybe a lot of what we're seeing with these trajectories is just an attempt to try to get back towards top of this trend. Early attempts to like break out and go back up. One of my concerns, I guess, in doing the charting this way is that shift thing, because like this doesn't really make me feel super confident. You know, when I look at the shift value, I'm like, well, if it never shifted and this stayed where this was, could I say the same thing? Did it really ever come back below? Well, no, it didn't. So there's a lot of complication here in that it doesn't really match the shift value. Some of you guys are like, what are you even talking about? What I mean is that technically, like, if this shift hadn't occurred and the chart was here, then the expectation would be unwarranted. It's like a chicken and the egg kind of thing, because you wouldn't have dropped this middle. This would just be like a weird, I don't even know what you would think about it. It would never have gone low enough. You might even expect it to drop pretty far. I don't know. It's a mixed bag. And then somebody else would look at it and say, well, I don't think it's going to go up beyond there, and that's really low, yada, yada, yada. It's not going to go beyond here, and it's not going to go beyond. That's like the 869 argument. So it doesn't work. It only works ignoring a shift value and looking at it as like a massive wave. Yeah, it happened. I don't know if they're gonna if it's completed yet. I think they're doing the. That's why I said they let it go over the holiday. I think they're probably doing a lot there. I think a lot of people are buying it up right here. I think it's pretty much finished. You're probably going to get an announcement that's going to rocket it within the next day or two, or maybe even in extended hours or something going into Monday. Who knows? It would not surprise me. It really would not. But I think it's pretty much done. They had said between $4.20, and $6.20. Here's the average. Here's what we're going to make. Here's the amount of shares we're going to let go of. I feel like that volume has been met. I could be wrong, but I just got back from vacation. I'd have to look at the volume. I would venture it's probably been met, or it's very close. So. Why? It brings up a lot of questions. What about 50/50s? Because this bottom here does lead you to 50/50 cross. That one worked very well. That doesn't work. Why am I not doing it from the right? Should have worked. That one kind of works. It's not quite right. I already did that one. These cats are being ridiculous. Bottom through the middle should give you an approximate answer of where it's going to be when it comes back up. I guess it's not that off. It depends on where you draw the bottom. I think that's a challenging question. But if I were doing like a waveform analysis, this would be right here. Because it could go from like the middle of this wave through the center, and it should hit the next middle of the wave, but it doesn't hit the top because the math doesn't work right there. It's just not right. It's like, in concept that's correct, but these things don't distribute across the top of a wave with a pointy top. Like, you don't hit the top of the wave neatly and create a nice like rounded top. It's very rare. It wouldn't do like that, right? Instead, what we get is like a massive upthrust and then a long distributive cat ear. And so it's confusing because the middle of the wave is actually here, like in the center of the two ears, not where you would expect it to be. So the triangulation becomes really challenging. You'd have to use like local stuff. And the same goes for the bottom. It's like 2 points, not a nice rounded bottom. The wave itself doesn't conform to what would be easiest to measure. It's like harder to measure. Yeah. So this approximate middle should be here. I might have my my sine wave or my fib thing a little off, but this should be approximately like the center of the wave. You know, that is a very interesting idea, because I think that if that's the case, and this is like the middle wave, you know, that should be the middle of the next bigger wave. You guys are like, what are you talking about? Because that would be what the breakdown value is. Like this hook would then represent, to some degree, like wherever this is supposed to be coming from. Maybe from back here. It should represent like where you're going. I'm looking backwards and forwards at the same time. Yeah, it's like right there. So this should represent, ooh, this is nice. Is it, Booksy? Yeah, it's nice, man. Real nice. That's really nice. So that should represent the middle of a much, much, much bigger wave that doesn't even exist yet. I mean, it's kind of like there, but it's not there. That's where we're going back to. You guys are like, really? I thought you said we were only going back to 80. Well, yeah. I mean, short term, probably. And I think there's a problem with this because, again, the shift happened. I think when you take the shift in consideration, it changes a lot of this stuff, you know? Like, I would take this and move it down based on the shift value, and it may be like 80 instead of wherever. I think that's a very important element to this that's not quite represented. But in theory, could that be the middle of a massive wave up, down, up again? Yeah. Purposely not zooming out because I'm using the extended hours trading. But normally that cat ear, just like you see back here, this cat ear would give you like a trajectory, you know, potential trajectory of where you're going to go later and come back up. It's not perfect and it has to be done well. But remember, like this is support, attempted support. This is reclaiming support, pushes up. Goes back to the top. Then this is trying to hold it and then losing it. So this is ultimately like the direction that bulls would have been wanting to go. This way. And then later, what if, I gotta try it now. I'm going to pick them out kind of willy-nilly, but what if those represented like triangulations for like where you want to come back to later? Much like what we experience elsewhere. It's like a reverse, actually should be, I don't know if it'd be peak. You'd have to find like the middle. Yeah, I think peak is too much. I think it'd be like the center. How do you do that? Man, I don't know. Maybe the center of the wave? When do you return back? Way over here. Well, there's one way to find out if that's right. Yeah, it's pretty close. I mean, it's right there. It's suggesting that this is the middle.
Giant guy with a big fire
Sauron?
Yeah.
Yeah. That's Sauron, all right. Let's go to the middle on this cat ear. Instead of the middle. Like there. Let's drop this down. It's going to 300. Way out in 2026. Oh, wow. Look at that. Not bad. bad. I don't think that's way off. This was when it was at $60. Remember that? And it dropped down to like 30s. It was right there. It's at that ledge. Right there. So what I'm saying is that's a wave, a complete wave. We could make it like way more precise, but that's a wave. It goes right to the center of the kitty cat ears. Bought in around 56 before the 60-ish. Yeah, it was like around 60, I think. Yeah. So the number seems really inflated now, but it was only like $60. I mean, that's a really nice number. I can't quite tell where that is. This is May 2025. It looks like late 2026. But then this is where things get kind of dicey because I think we did the same thing before, and then we took that 226% shift value and it was like different. So how do I do that? Might have to do it on a calculator. Because it ain't gotta be right. We need a number that times that equals this. But it has to be the percent, so let me do it in reverse. Let's see if I can do it real quick. So 309.99, it's basically 310. So we'll just say 310. So 2.2636, 136.94. So 136.95. Seems really low. But I think that's right. Yeah, no, never mind. It makes sense because this value isn't right anymore. So let's see where this goes. Yeah, so it seems like unfair because it's like, why is it so off? That makes perfect sense. And then this is it right here. It's that hook value because I remember when it drove down, we were looking at those shift values. This is where the gap reset here happens. It's right on the dot. That's great. Perfect. As it should be. It should be right there. That's good. I mean, it may not be like 100% correct. I could be off by a little bit, but I think that's pretty darn close. So in reality, it doesn't go back to 300, even though that might seem really appealing, because that's not the accurate value anymore. 136.95 is the more accurate value, and that's starting to wig me out too, because that looks like this value here. Weird. So it sounds like it's not right. Like it's, oh, it's just way too low or something. But actually it's right. It's about the same as the $60 value. So Man, that is weird. That 136.95 is, I think they knew that when they dropped it from here. They created like a smaller, shallower wave. That, I mean, I say they, I'm talking about like institutional quantum trading junk. It's right off that nose. Oh wow. This goes back to the top here as well of the big run up. It's higher than expected, but not completely unwarranted. Look at the value of this target. This target value is the original liquid center, basically. When you go back and you look at the, yeah, I mean, look at that. That's super clean. So it seems like it's wrong because it's like, well, that didn't, then it's not actually going back to all-time highs. And you're right, it's not. But it kind of, this is confusing. Kind of is because they diluted the stock. So like, what's confusing is the amount of dilution that's happened plus ape and the dilution that happened with ape. That must be this value here that's missing. So the valuation is correct. Your cost basis wouldn't necessarily be wrong because it got shifted around, but take it back to like this original middle value. That's pretty incredible. That's a hard math problem to do. And I think we just did it. So this is a 225% roughly. Again, not perfect, but it's a 226% shift. To match the value. It's not, again, it sounds wrong, but it's not wrong. Did this before. Yeah, and then that's really crazy because it returns right back to, man, oh man, what a chart, dude. This is some kind of like perfect magic. Do you think there's somebody out there that's been holding it and trading this since the very beginning who has like an average value like here in 136 range? And then when they brought it up, they sold. They bought more down here, but then they sold a bunch. I wonder. I can't tell what day that is, though. I think it's February 2026. Here's the big test. Does it match? It looks like it's matching already. I haven't even like done it yet. Oh man, it does match, doesn't it? You can't say that because you can't say it does match. You haven't even done it yet. I don't care. It looks like it matches. What would be perceived as a unbelievable. Unbelievable. So I don't want to get like too hairpin about this because I know it's going to get it's going to bite me in the butt anytime you do kind of stuff like this. But there's a measurement that I made, and I can't even see it here. I guess the gap values are different since it's extended hours, but there's a measurement that I made here, and it points to the very top on this wave, and it's derived from the bottom value to the gap. So it's like where the bottom happens to the gap, and it points all the way back up towards where the final top will be. And when you look at the overall wave, it's kind of a wave of, again, like I always think about like pressure on the top, pressure on the bottom. So like where did it hit resistance and then where does it hit support? And usually what I'm doing is stuff like this, where I take it into consideration that it was going up and then it broke down, and then this is where it kind of fails, right? And this ends up becoming like a really important trajectory for later on, because it's like it was trying to go and continue, but it failed. And then this is where bulls came back to sort of meet their end, right? And this is really significant because this happens all over the place. It's pretty straightforward. Usually you can see it visually, that's the trend that was lost. And then if it can come back later, that's often where it goes back to. Again, maybe just as a natural course of action, this is also generating probably some kind of a channel as well, right? And that channel is eventually broken, but sure, like there's a channel element to it as well, I'm sure, here. I'm not going to get into that too much, but I'm sure that's part of it. But anywho, when I look at that, I'm like, okay, so I expect there to be those kind of motions, and I see it right here, like this is that same motion right here, it's going up to meet it. But my expectation would be if this has the same kind of wave structure, and it didn't happen, remember we were thinking like it might happen right here and go to 869, it never happened. Well, if it does go up to 20 something, it's in the right spot because it would be right where that thing would nick it. And it certainly would look kind of on the nose if it hits it right there, but so what you're saying is, Booksy, I should go all in next week. I don't want to say that, but it kind of feels like that. Or it's going to be really tight either way if it does do this. Yeah, so you would expect the wave up to kind of pass through the middle, and didn't really do that. It got close, really close. It like looks like it delayed too long. But again, you'd expect like a wave up and then wave back down and then push back up again. And it's very similar. So it is in the right spot. I will hold my reservation about it until a little bit later. I want to say that when we did this before, what we found was that this marker, so I just did it in reverse, right? But I think what we found was when we did it before, it was like here. I want to say that that's actually where we triangulated it to. So this top line is the new line, but the one that we did first, we did it forward thinking, not backward thinking. We just did that one like, I don't know, inductively or whatever. I don't know, whatever the reverse is. There's deductive and inductively, I think. You might be mixing them up, but we did them the opposite way, because the first time we did it forward looking, and we were looking at specifically this guy to the where the gap is, and it hit here. Now we're looking at it in reverse, but it doesn't really make much of a difference, does it? It's kind of like apples and oranges. It's like, well, all we did is we did the shift value from the original cat ear middle. Like, where does that project? Projects out here to 309.99 or 310. Shifted it down, it projects to 136.95, which is a really nice number. It's the liquid center of the original range on this thing. It makes sense that you might come back there at some point if the valuation settles down. It should, right? Like, if that's where we think this is valued as a 150-year-old company, then it should eventually come back there. So it makes perfect sense that it might come back to 138 or 136.95. So that shift value stands, it looks pretty good. It could be a little bit off. So we kind of keep that under our consideration. Like, could be a little off. But what's fascinating is then going backwards from that point, you would expect it to work, and it kind of does. I mean, it's really close. So the wave here does seem to me to have kind of a new 50-50 break in it from this bottom to this top. Now it getting kind of hairy here. We kind of split the chart up like a million times, but my expectation would be that this would, no matter where it goes, this would also have kind of a 50-50 move around probably the major creek. Yeah, so like it's really quite fascinating because it's already set up. I mean, it would already set up on this drop down from August, which is basically the same level. So it's kind of already there. And the gap level right here is the halfway point between that top and the bottom. So it's set up already to sort of give you that gap, pull back down. You'd have to get some kind of a rebound. It's an M cross, 1, 2, 3, 4. Yeah, potentially, without even ever going back to go to 3 again. I don't know. How does it go? Do we have timing? Is that even possible? Is this like the same timing? Is that possible? 141? I'm going to lose my mind if it's the same. Son of a biscuit. You guys are like, it's the same, Booksy. Yeah, it's the same. Which makes sense. It should be, because this is the wave. So wave in, wave out. It would make sense if it were the same. 146. I think this wider one is correct. 146. I can't do it. I keep messing it up. 146, 146. That's another way to do it. It's like a whole nother way. That's 143. Actually, steeper. So this is a little bit wider. So this is like another way to do it. So this is 146.61. So this is the shot. Remember I was saying there's like another, I was like, oh, there's another wave because of where they marked this off. They marked it kind of right at that level. They created like another wave because they're basically resetting it. They revisited it right here, right? This is pushing out above. This is losing support. Distribution starts here. Distribution 1, distribution 2, UT, UTAD. Go back up above 136.95. That's where the breakdown happens there. There's another breakdown lower. So 146.61 is another possibility. And that's a little bit later. All three of these are very strong. I think looking at the grand scheme of things, like I would believe any one of those. That doesn't mean it follows it. It's just a trajectory, but when you look at it up close, the interaction there is uncanny. They're all kind of respected. And what's fascinating is, like, I know too, that's where the kitty cat here kind of happened to sort of take a nosedive right here. This is where you get the middle. It's a dip through that level. It's like an invisible wall, an invisible support almost. Like it's only used a couple times and then it doesn't quite respect it. It's enough to kind of give you a feeling like there's something there that could hold. We thought it might back in July, but then it gets gone and you don't really think about it again. That's exactly what we need to think about though, because it's very possible that this goes up again. This is very possible. I think the hardest thing is going to be identifying like exactly when it needs to go. It really depends on which one of these lines you think is right, which one is going to be the most accurate. I guess I just picked the middle just to be safe, and that's the 15th of January. But they're pretty wide. I mean, they're like weeks apart. This one's obviously gone. It's in the past. But if you use the top, which is still very relevant, it really could be any time because this passes through this marker and then doesn't, and like chops and drops off of it. So we might be getting like a glimpse of like a range here. Like there could be a very simple explanation when we actually get there. But I think this could be like a glimpse at like a potential range that goes from just slightly over this to slightly below it. It may represent a breakdown in February. Like that could be exactly what we see is that this ends up being like a wider range here. And then it drops in February. So on and so forth. So the chop itself could go quite beyond. Why not just keep going? Well, I don't think it will because I think just like this one came really high and then all the way back down, I think it'd have to be kind of similar. There's a sense of layering here. And I'm seeing a little bit of like a curve. Man, I don't know how to do this next part. I guess you go from here. You go backwards. Yeah, it'd be like bottom, breakthrough, top, breakthrough, jump, drop. Yeah, I hate to say it, but it seems kind of likely that it would come all the way back to 8s. If it's a lot like what happened in February of 2021, that doesn't exactly not make sense because this came back down in February, pushed back out a bit before then. So it would be a really massive retracement possibly going into February. And that does work. And then the rest of it would be like a, I mean, it's comparable. This is a little bit more like what we had kind of looked at before with the shape. I just had it lower. I had it down here. I don't know. I don't know where it would be. But it does make a lot of sense. I think the rest of this is a little more confusing. Because it's like, well, where the heck do you go out? Oh, this is like too soon. This is like June. It's because I'm on an extended chart. I forgot about that. I'm making it really tight. I'm used to working on a non-extended chart, but it's kind of a cookie cutter. Yeah, it does beg the question though, why you even bother going all the way up there? It's not like you're gonna go from June all the way to wherever this is. I don't know. But that's the mystery, I suppose. This might be where we see it kind of come back to roost. And then there's an expectation it's going to be just like June where it just starts dropping through. And it's certainly a reasonable expectation. But maybe it has like another leg in it that no one's really expecting. And then it starts kind of coming back or whatever. That's certainly not out of the question. I don't know. That's a weird one. I don't know. That's the first time I ever really explored that high anyways. But it does make me wonder. Or this is just really long, kind of like this was. And it does make this huge move, but it doesn't do it till way later. So it's just a longer, everyone expects it to go in June and doesn't go in June. And it takes a really long time. That also seems likely based on what happened here. The way this bottom like flattened out over time. It wouldn't surprise me to have some kind of really slow, boring setup, you know? It's a thought. We'll have to work on that later. But the wave itself, it does seem pretty straightforward. It does seem like there's a strong chance of a triangulation up here anyways. Worst case, I still think we're probably going to hit 80, 90, which is still really good. And I don't need to like prove it all right now. You can't prove these things until after the fact. I really think this looks good though, guys. I think we're in a really good spot. Like, I'm pretty excited. I feel like the only thing that's missing here, I'll have to go back and see if I can find that wave. I know you guys asked about other things. I get it. It's been a while. I know, but I'm trying my best to like catch up on this, and I just want to get an idea of what I want to talk about for the weekend. I'm gonna have to explore this some more, but yeah, I genuinely think this looks pretty close to right. Weirdly enough. I wonder what the retracement is on that. Like in reverse. I'm gonna just eyeball it. I don't care if it's like perfect. Yeah, I mean a 618 retracement, that's a 786. It's right there. Those are the two major targets, right here and then right there. So pretty close. $786 retracement. That's a bearish retracement. It's going the other way, but don't forget our comments. Well, I know. Sorry. This is what I do when I work on my own. I meander through charts. Let's see how close I was. Yeah, I know. 65.95 is the 6.5. It's 132 is the 786. I wouldn't be surprised if I'm like a little bit off and that ends up being more correct, but it's very close. Yeah, PGHL was one that I thought might take off going into Christmas. I remember thinking this chart was really weird because of how fast it looks. I don't see anything bad here. It's like rising. It looks good. It looks like a wedge. It's making higher lows, which is good, and lower highs. It looks like a bit of an SOS type deal. You know, obviously I'm not completely right all the time. The targets are important, more important than the lines. Like the overall targets, confirmations. I still think those guys are possible, but this green one was significant as well. Yeah, it's just trying to break out of this channel, and it looks like it's doing a pretty good job. It's sort of like the same pattern that we saw here. So the similar kind of need to see like a jump. I think if you see that jump over the creek, it's probably going to back up first, and then it's going to run up again, like another leg. I'm starting to see a bit of a widening maybe. Nothing too crazy. Get rid of this. Like, I know that's where it would go if it broke out, but I don't know if it's going to get there. Seems more likely that it's going to come up to, now I'm just kind of looking at it, maybe come up to roost around 250. Still a good trade. And there is a gap up here, so it's a decent enough, two gaps going up to 230. Pretty decent estimation, I think. So a bit of a widening. So confirmation is, I think around 160. It could be a really good trade. Maybe like 169. Yeah, I could see it like pushing up really quick and then just ripping up to the top. Man, I don't know. This looks like it would happen fast. I genuinely think we might get a market squeeze Monday. That looks good. Bit of a head and shoulder on the RSI. So I think that pop might present itself like that. Like, it could end up looking a little more like a head and shoulder here, even if it goes pretty high. I've been looking at this as if it's probably going to go to at least 2. I don't think it's going to make this leg up unless it finds support. I talk about these drops quite a bit, but this is a really weird one. It doesn't have a lot of consistency with it, so I'm not sure it's going to make that move. I wouldn't put a lot onto that. If it does, cool, but I think this green marker is going to be the challenge. That's where, if it goes above that, maybe you get up to here. And that's about as far as I would take it. So you're looking at a couple levels of checks. That's a good one though. I might trade that if I can catch it. It's a simple trade. It's ready to go if it can jump. So all right. Heavily distributive stock. A lot of high volume in these tops, followed by lower lows. It's accelerating too. See how each of these is getting faster. And they did a split, so, and they already checked the split level. So that's kind of what we were hoping for with WTO, was that it would come back up and check that level, and it did do it here. Just blipped up and then it came back down. So think if it comes above like 180 and holds for a bit, this is moving average seems pretty telling on the hourly. It can come up here and kind of work its way back out. You know, it'd have to be something like this. First, it needs to push resistance, which is pretty high. It's at 250. And the only reason I think it might be able to do it is because you see when this did like a double flush, it turned into a diamond. So it went like high, high, low, and then it boiled into a corner here. RSI is pushing up. It's similar to what happened on this, except notice that this is like low, like below. It's stuck beneath the floor. This is not. This is above the floor. So it's possible, just from a very basic charting standpoint, that if this breaks out, it goes pretty far and fast to like 343. So 60 degrees. Yeah, it's kind of right there. Gotta be careful with this kind of thing because it kind of makes you excited and it's not really perfect science. But the general principle of the diamond is as follows, is that you get that symmetry on either side. So it's at a spot right now where, again, would not surprise me if Monday into Tuesday it just popped and went to over 3. And I have to kind of wonder what it's targeting. 327. Maybe. Yeah, maybe a 0.5 retracement. So maybe to there. Let's see what else there is. So one way to look at it would just be like, oh, it breaks the diamond, it could rocket up. But another way would just be if it jumps that EMA, should see that move. And then, yeah, that diamond happened right on the creek, so. Yeah, it follows. Like, if it held, and I don't know if it will, it would follow that this would give you perhaps like a leveraged 50-50 move around the next creek. I wouldn't be surprised if it dropped one more time, completed the head and shoulder on the RSI, but didn't go low, didn't make a new low. So it goes to like 134 and then it pushes up. Seems possible. So perhaps this could go as low as like 130s. That's about as far as I could take that. I don't see anything else to really look at. The rest is fairly speculative. Like, I want to say that the split comes back to this value on purpose because it's a long-standing trend. Beyond that, it just kind of looks like it's coasting right through the middle of it. So it's like just a comfort food kind of thing. Like there's obvious liquid and trading along it. It's a contested line. So yeah. So again, maybe a good point of evidence. that it does come down one more time and hits that or something. That shoulder completes. Maybe it's not as low as I said, and then it completes and runs up. Checks and balances, I suppose. It might make more sense of this if the pullback came lower. That would give it a better chance of hitting here, which I think was a better fib. Oh yeah. Yeah, so I think what we may see, I'm not 1,000% sure, but I think we may just see $3 like even. Which again, that's like a no-brainer if you're just looking at a 0.5 retracement, but what I'm thinking is that it may dip, it doesn't have to, but it may dip very quickly. RSI kind of gives me the feeling it's like done, it may just push, but it may dip very quickly down to 153, but if it doesn't, it should just break above, yeah, and start heading up. So pretty good trade if you can catch it. Might be a good 80% move. But I would suggest that it's not really much, there's not much to trade unless it jumps over like 170. Like it's not the strongest trade until it makes that jump. And then from there you can go pretty far. I wouldn't put it much past 3 though. Like I know it's breaking out and you're like, well then wouldn't it just go? No, not necessarily. Usually these things are, when they're curving outward, they're trying to meet some other angle. And I venture a guess that it's this trend here. Just without even really looking much at it. So like I would take that to the top and then suggest that, all right, if it did go any further, it may go to like 380, which again, that could make sense, but that's about, again, it's about as far as I would maybe move it, something like that. That's a maybe. I don't know about resistance being at 7. I mean, there is a sell-off point here, but I think the reason that I think they would stop it is because this right here, the reason I drew this line is because this is a trend that they've been building. I didn't do it, you know, the market did it. And when you go back and look at it, it's kind of straightforward. There's 2 points of interest right here and here. It does go back in time a good bit. It seems to kind of gravitate backwards to this breakout that happened in September. That is mirrored right here on the top, like it's echoed on the top. So there was also a breakdown here in October and another one on that wick. That wick wasn't just a back test after the split. I mean, it is, but it also generates now this channel. I think it seems pretty straightforward. So if it were to pop, I would be looking at that. It's also a 6.5 retracement, which is the golden pocket. So if you're looking at a bear from the bear side, that's a retracement that's really ideal, right? Is a golden pocket retracement and then potential advancement, you know, on the bear side. I don't know if it's going to advance on the bear side, but if I were a bear, I would be kind of looking at that, like I think it's going to go and then go again to like push to $1 or something like that, right? I don't know. I mean, you can go from there, but it's a common sense retracement, and I think, yeah, it makes the most sense because of this. So yeah, I don't foresee it, but I'm not, you know, I'm not all knowing, but I wouldn't foresee it going beyond 4. I think 390 would be a pretty huge blessing, frankly, for something like that's kind of in a free fall. So That's assuming it can make that jump here. So if it rallies with the market, I think it's likely to go 390. I don't think it's going to go further. I venture a guess this is like a UT followed by like a UTAD kind of deal. You're going to get multiple up thrusts on RSI, and then it's going to dump again, Cattier style. And that's when it'll come back and revisit this marker here. That's my opinion, but I think that's what would be most likely. Is it would up thrust and then like fail and then probably drop down. And I know that's is like, oh, you think it's gonna like bleed out forever? No, I don't know for a fact it's gonna go below $1, but I think that this is just the general chart. Like that's the way I would see it. Is that it's been setting up for a distribution right here. And if it's good, maybe it goes up, and then it doesn't come low again. It takes a long time. And it just abandons that altogether and stays down here, right? Like that's possible. It just never come back below like 130 or something, or $1. But I'd be nervous about this if I saw this. Yeah, I could see it being a pretty quick dump. Not a bad chart. It's just quick. A wolf diamond bottom. This will be the last thing, and then I gotta go. There's like nobody on here anyways, but I'll be back Monday. Yeesh. What happened? I mean, this is a distribution beyond all distribution kind of thing, you know? This is an example of like a false breakout that really stings because it looks like it's going to continually go up. This is the only thing that could have told you right here when it pushed high and then broke low. See how it made a new high? Then it came back down, and it immediately came back down and pushed that creek. So it immediately pumps up, immediately comes down low, pushes the creek. There's a huge amount of volume right here. So that is promising. I suppose we're coming back to check this level from the beginning of time. Man. $32. You're saying you think it goes to 17-ish. There's not really any way to know when it hits this mark. It already had a pretty big auto reaction type deal here. It came back up to 17s, so I'm not sure if it would do that again. It's just sort of redundant. I don't think it's a bad idea for a trade. You can see the RSI is like flattening out. It looks pretty nice in that regard. Like it's about ready to just pop, right? That makes sense. Oh, I'm gonna say that I don't think it's Wyckoff. Because if it's Wyckoff, it just looks like it's distributing. It might have a series of like LPSYs and just chop down. So you would just have it come up. It may come back to like the 20s or something, and then it would drop again and kind of lose itself over time. It'd be a really long term because this is a big chart. Because this is distributive. I mean, you don't come up, reach the top like that, and then break all the way back through unless you're planning on selling all the way off through the range. I would suggest that the RSI is going to be a really helpful tool here because I can see it a little bit more clearly than on the price action. There seems to be a gravitation to pop, but it would be difficult to identify exactly where it's supposed to be based only on price action. Yeah, I don't know. But this thing isn't really moving like that. And it doesn't make any sense because it came up high. It like broke through its creek. So it did retest this guy, which is fine. And if it can find support here, it may not matter long term because this is obviously a really important support. But it's hard to look at this and think that this is super healthy. I don't know what happened. I don't know the company, Wolfspeed Incorporated. I'm not sure what happened to it, but it doesn't exactly look great to me. I don't think you're wrong, like long term, this could have a really great run in it, eventually. But it does look like it had this trend, this wave right here that was developed. It lost it, and now it's pushing down away from it. And it's kind of just stuck. Certainly with this, it looks very promising, but it's being that it's in an RSI low. But I don't know if that necessarily means a whole lot. I don't really know the chart that well. Because this went up really high and failed. So kind of indicated that the market was sort of done going up with it for now. Like it had gone high enough for long enough. Yeah, this follows. It's logical. I mean, it's doing things in a way that makes sense, which is always nice. Yeah, it's a nice clean like cross. I don't know. I probably wouldn't trade it just on a whim. Just me personally. I haven't looked at anything but what you've seen. This looks okay. If this were to break about here and really push up and you saw that happen and the price kind of follows suit, I think that's a good sign that it could be ready to pop. And it looks like it's basically done. It's kind of had this big sell-off, selling climax. Did it again, but it came lower. I think good news, I suppose, is it looks like it's kind of finished the X. I think this kind of chart bugs me because I feel like it's probably going to have some kind of a move back up, but I don't necessarily think it's going to be like it would make more sense for this to come back to like 24 or something at some point in the future. But I don't necessarily think that means it's bullish. So it's like, well, it's got the potential for like a massive move here. I don't see a diamond bottom, so I'm not sure what you're looking at there. I don't see this as a diamond. I don't know, man. It doesn't look very tradable to me unless it comes back up and holds above. I guess it's like 772. And then if it does do that and it advances here, so it makes like a higher low, and then it makes a higher high, and it can hold, I think it might be a good place to consider entry. I'm not seeing a diamond, I'm just seeing like an M cross, you know, like down. So it needs to start making higher lows. It might end up being one of these things that's like super fast. You know, it could jump and then come back quick, but just the nature of this chart is very long. This is a really long chart. This goes all the way back to the 90s, so this is a huge structure. This is years and years and years and years, decades in the making. I would just not be overly shocked if it spends more time right here. It hasn't been here since 1998. Well, V-shaped bottom, rockets to 200. I don't know. Like I said, I think there's a decent chance it comes back to like 26. It seems very likely at some point here in the next couple of years. I can't find it. I can't make a strong case for 17 right away. It's heavily divergent, so I guess that is that on MACD during the sell down. That's a pretty bullish chart. Oh yeah. So this has been bearish divergent for a long time. Long time. Yeah, it really just looks like it's going back to maybe where it was going to go all along. It might be a good long-term trade from here to like 24. Wolf Semiconductors. Yeah, man. I mean, that's another thing is like, there must be some reason why it dumped last year, but it was obviously setting up in a kind of a meh setup way back in 2021. So that's where the distribution started. So maybe if this is a company that I research more, I believe in it more, I think I probably invest. It is at lows. I think I'm just nervous because I can't really see the goal. If this is a sell-off, just double flush. Yeah, Reese, I mean, go look at like GME or something, you know, or anything, and you see the giant M shape and it drops down low. And it doesn't look like it's going to recover, but if it does, it's going to be a massive push. I mean, the beauty of it is of like, I could be wrong and it just comes up in the next couple of years. You know, you could be pushing ridiculous high numbers, you know, because of the nature of where it is. But I think that just again on the surface, it's a challenging one for me because I feel like there's there was a long-term distribution here. I see a heavy amount of volume on the bottom, which is good. It's kind of light on the top, which is good. I feel like it's almost done, if not done, so I don't know, you might be onto something because it is in a very symmetrical spot. I can certainly see why you'd be attracted to it as a potential trade here. You know, the long-standing wave is huge. I mean, the suggested rally here on this wave up, down, up would be massive. Massive. But just as a general chart, I think I can't really look at it and ignore like the possibility that this is just kind of gonna hook here and then just sell down. So there's too much uncertainty maybe. I don't doubt it. I don't think it's a bad idea. I think it's a great idea. I think it could be a really big deal long-term trade. But I have to just kind of sit on it for now. I got the chart. We'll look at it again. It's very possible that this could be like a massive long-term rally for the next couple of years. It's also possible it gets up to like, 24 and kind of craps out again. So we're just sort of waiting. This is weird to me. I'd have to look into it. Why did that sell down like that? Did they lose something? I'm not sure. Like lose a bid or something? I don't know. $100 to $7. There's no splits or nothing. It's a big move. Nevertheless, I still think it, 718, good place to be. Why does that say 718? I meant 769, sorry. I can't really see anything else. I'm looking at weekly, by the way. So maybe you're seeing a diamond on like a smaller time frame. I'll check it out. All right, guys, I'm done. I'll see y'all on the new week. Y'all have a good one. Thanks.